Good evening, everyone. I welcome you to this second day of a series of web lectures on income tax specific topics. Yesterday we had a very eventful session by CA Kapil Goyal sir on section 148A and 148. Now today we'll be dealing with appeals to commissioner appeals, and we have a eminent speaker, a well-known person, and also a former chairperson of SARC. Above all, he was ex officio of Vijayawada branch for 2 consecutive terms, 6 years. He was ex officio of our branch, during which he supported our branch to the fullest possible extent. We have our chief guest today, chairperson of SARC CA EB Geeta Madam also. So I welcome the speaker as well as the chief guest, and also I welcome all the participants who have joined in good number and made their time to update. One thing to be appreciated, every chartered accountant these days strive to update his or her knowledge so that they will be relevant in the field and relevant on day-to-day basis. So friends, we will commence this seminar with a motto song. This being a virtual session, I request you need not stand, but you may place your your hand on your heart as a mark of respect. So branch in charge, Ramesh, please play the motto song.
य एष सुप्तेषु जागृति य एष सुप्तेषु जागृति कामं 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 कामुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Yes. So friends, you all very well know Geeta Madam, who is the SARC chairperson from Bangalore. Of course, ఆవిడ మా తెలుగింటి ఆడపడుచు from Chittoor district, settled in Bangalore. She was in the managing committee of the Bangalore branch, branch, and also was the chairperson of Bangalore branch. Thereafter, she got elected to SARC for 2 consecutive terms, and this year she is the chairperson. Friends, this is the 73rd year of SIRC. And in the last 73 years, A.B. Geeta Madam is the only second woman member to be the chairperson of SIRC. That is after a very long time. The first woman chairperson was some decades back. There was a woman chairperson to SIRC. Now we have Geeta Madam. But this time, the beauty of this time is that the next chairperson of SARC is also a woman member. So friends, having worked at Bangalore branch, and she got qualified in the year 2003, and for the last 2 decades, more than 2 decades, she is into practice, and also she is involved actively in the institute efforts, be it Bangalore branch or be it now SIRC. For the last 6 years also, I am in the Vijayawada branch as a committee member, and I am watching her performing at the SIRC in various capacities. So I request Geeta Madam to say a few words.
Thank you, Nitya Kishore Garu, for your nice introduction. Respected Chairman of Vijayawada branch, Nitya Kishore Garu, and coordinator of the program, CA Jayant, and immediate past chairman, Narendra Garu, and distinguished speaker of the day, E.Phalguna Kumar sir, who is also one of the mentor of me, and the members of Vijayawada branch in particular, and ladies and gentlemen. Happy evening to one and all virtually present here for this web series. I'm delighted to be here for this today's webinar, that too on web series which have recently started and from Vijayawada branch. It's my pleasure to be part of the second day of 3-day series. As Kishore mentioned, yesterday we had one session on assessment proceedings, that is on reassessment, intricacies of assessment proceedings, that is under section 148. And today we will be enriching our knowledge on commissioner appeals, and tomorrow and one more appeals in front of tribunal. So by the end of 3 days, we will be enriching ourselves comprehensively, exploring the appeal procedures. I thank the Vijayawada branch for having this webinar. So this webinar itself is a testament of Vijayawada branch. It shows their commitment in providing the relevant and valuable knowledge to its members. And also I appreciate their keen interest in understanding the need of our members. What members need, that only they are doing the programs. They are structuring the programs in such a way it will be very relevant and apt to the members, which are very much required at this point of time of this subject. And at the same time, I also appreciate their meticulous planning of this program, especially this program. Despite the limitations which we have of organizing 2 webinars in a month, they brilliantly designed this program in such a way so that we will have the seamless sessions, end of the month 2 sessions, and then starting of the month 1 more session. So in such a way, there will not be any break in between, but at the same time, following the guidelines of the institute, having the webinars in a month. So kudos to Vijayawada branch for having this program in such a planning in such a brilliant way. Icing on the cake, we are honored to have our distinguished speaker, E.Phalguna Kumar sir, who has played a pivotal role, as Kishore has mentioned, as a SARC chairman. And his vast knowledge and experience in tax laws, combined with his leadership skills within the institute, make him the apt person, ideal person to guide us through this topic. I'm confident that his insights will be invaluable to all of us. When it comes to today's program about the subject is very important in many ways to all of us. Especially the first one is the process of filing and handling appeals requires a deep knowledge, a deep understanding of tax laws and procedural requirements and nuances approach to draft the appeals. The significance of handling the appeals is it cannot be understated. In the era of these phaseless assessments, the way we prepare and present our case laws is fundamentally changed what we were doing in the earlier days. So it's no longer just about following the traditional method. We need to understand the procedures, and innovatively we have to apply our skills, and we have to present our case laws, and we need to present our side of representation in a precise and effective way of communication. So the outcome of appeals can have far-reaching consequences for our clients and affecting their financial stability and compliances with tax laws. So therefore, it's a crucial for us to get it right, from knowing when to file, where to file, and how long it takes. And whenever the client approaches us, is first ask this question: when to file and how long it takes, whether the case, if I fail the, if I file the appeal, whether it favors to us. The success rate also we need to know, at least to some extent, we need to discuss with them, and how much fee will be charging, and the advice on the chances of success and everything we need to understand. So if we know about all the things in depth, then only we can handle such appeal matters. So this requires not only the subject matter expertise, but also practical experience and strong drafting skills. So we must adapt to the digital age by honing our drafting skills to convey our message effectively and clearly. So this is where the guidance of the experienced speaker like Palgun Kumar sir is required, and the insightfulness of this webinar so is very much useful. So let us embrace the knowledge shared by our today's speaker and apply in our practice in a day-to-day practice life. Before wrapping up, I would like to share one announcement. We are planning to have a CRC conference in Bangalore. Then we are fixing the date. Tentatively, it will be on August 9th and 10th. So we have not yet finalized. Maybe the date will be on, most probably the date will be on August 9th and 10th. So I request the members, so block your calendar and please visit Bangalore. And we are eagerly waiting to receive you in Bangalore and hosting our SARC conference. So I thank Vijayawada branch and especially Nitya Kishore Kumar Garu sir for inviting me to share my thoughts on this day on this subject. So I wish you all the members to have an engaging and informative session. Thank you very much.
Thank you. Thank you very much, madam. That is a good curtain raiser for the coming session. And you have highlighted or touched upon the key points on which this deliberation for this day will be going on. And madam, one request is please August 9 and 10 because we already booked the tickets. So, and also on behalf of Geeta madam, I request all of you to please attend because Bangalore is very much accessible for all of us in this part of the world, South India. So from each and every place, there will be connectivity to Bangalore. And my dear friends, for the last, of course, I being in the committee for the last 6 years, of course, 2020 was a corona year, but thereafter for the last 3 or 4 times, we managing committee members are attending the SARC conferences, be it held at Coimbatore or last year it was at near Hampi. So, my dear friends, I rest assured very good knowledge updation can be obtained at the SARC conferences. And also we get an opportunity to meet our members. Of course, we will be meeting our local members. Of course, it is an opportunity to meet the members from other states also. Thereby there will be a good amount of networking also. So, madam, definitely from Vijayawada side, we assure you that a good number of participants will be attending the SARC conference. And also, I should thank you for making out your time and come here and express your thoughts on today's topic. Thank you very much, madam. We will quickly skip into the session per se. My dear friends, the speaker of the session, CA E.Phalguna Kumar, Dr. CA E.Phalguna Kumar does not require any introduction per se. He has extensively spoke at all the branches in South India. Of course, he regularly visits or he has a large number of fans at Kerala. Previously, also 1 or 2 times while we were discussing, Falgun sir used to say that Kerala people invite him lot number of times, and all the branches in South India. And of course, recently he has spoke at the a webcast organized by the ICA head office, where he spoke on trust. 2,900 participants have watched the participated in that webcast and got enriched. Of course, the second part will be by the end of this month or so. So, without wasting much of the time, I hand over the session to the session speaker. Sir will be deliberating up to 8 p.m. as per my understanding, and he has reserved a good amount of time for interactive session, wherein, having known Phalgun sir for many years, I assure you that all the queries in this session, the participants participating in this session, all the queries will be cleared by Phalgun sir. It's over to you, sir.
Thank you. Om Namo Venkatesaya. Esteemed Chairman of the Vijayawada branch, the host and chief guest, my good friend, energetic, dynamic CA A.B. Geeta. Her energy in Bangalore city, when I was say contesting elections and going around, I have seen her physical energy and popularity in Bangalore city. So I am fortunate to have her encomiums, whether I fully deserve or not, today. So other committee members of the Vijayawada branch, and I am fortunate to have now 268 participants. So I try to live up to the expectation of the participants in this topic of filing the appeals and dealing with the appeals. As chartered accountants, we file the returns of the SSCs, maybe 50%. For the other 50%, we audit the books of accounts, and along with the tax audit report, we file the return. This is the second part. And as we all know, around 2% of the returns they pick up for scrutiny and then try to convert them into scrutiny assessment. And even if it has not been picked up for scrutiny, or even if it is completed under scrutiny assessment, there is every possibility that again issuing 148 notice, the assessment can be reopened, reassessed under 147. Now, to deal with the subject, I try to give you an insight. Normally, in your graduation, we will see some courses as arts courses. We will see some courses as science courses. For example, economics, politics, you will see as arts courses, or English language. Whereas physics, chemistry, you will see as science courses. But actually, it is the way you deal with the subject. The same subject can be arts, can be science. For example, in many universities, psychology is arts subject, MA psychology. In some of the universities, especially where I am there, Tirupati, MSc psychology. There is no MA psychology. Why MSc psychology? Because it is a science, practice. So just like your psychiatrist, MSc psychology, they conduct the practicals, they make you a postgraduate, how to practice, not mere learning, theoretical. So why I quoted this? The filing of appeal, dealing with the appeal, arguing in the appeal, and ultimately presenting your view is more an art, and coupled with some basic principles, that is science. Science means wherever you go, the rule will apply, result will come. whereas arts means not based on the rules, fixed rules, which go on change. So the filing of appeal, though procedure oriented, but in my view, rather than the procedures, the presentation, the practice, the way you put the things before the appellate authority is much more important. So yesterday we have seen 148 assessment. How many types of difficulties are there? How the assessing officer will view, change his opinion. And though you have presented the facts, 3 possibilities. He understood the facts in a different way, wrong way. He interpreted the facts in a different way. He misunderstood it and applied it in different under different sections differently, and finally concluded the assessment. So in the assessment, when the assessee says something, files the return and presents his case, the assessing officer may not agree with the assessee's view. He may have a different view. Normal course of returns filing and search assessments, scrutiny assessments, survey assessments, search and survey, because the department has got some red flags. They conduct the search under 132 or they conduct a survey under 133A. They get some material, incriminating material. So some material based reopening of the assessments, and then they complete the assessment. Normally nowadays 148 after 1421, as yesterday it has been deliberated, the government wants more transparency. So from 1421 we are seeing faceless assessment and physical assessment to some extent. Physical assessment, in the case of search or survey, the central circle normally will do. In international transactions also, in the case of non-resident or foreign company. So the physical assessments will be done, whereas in all other cases, it is a faceless scrutiny assessment. So the around 20% of the assessments, the assessees are not able to respond to the electronic notices, thereby they are resulting into 144 ex parte assessments, not the 143. So the assessee could not put forward his case. So the assessment will result into a high-pitched assessment. The officer has no other go. But after the assessment, within 30 days also, he is not able to prefer the first appeal. But these 20% of the general cases where the ex parte assessment is done, after 30 days, the assessing officer will try to attach the bank account. Then from the bank, he comes to know that there was an assessment, there was a heavy demand, and as no appeal is preferred, I will try to share the screen. So the sir, Ravishwar sir, are you able to see the screen, sir? Okay.
Yes.
So the assessments which were ex parte done after 30 days, when the bank account is attached, then only the assessee will realize, oh, a demand has come, I have to wake up. Because till the time, normally business people and income tax assessees think income tax means once we go and file through an auditor, it is the problem of the auditor. E-filing notices, they don't open the income tax portal, they don't see in the emails, they are more concentrating on their business. So it is the business of the auditor, they think, to address all the notices. But unless the assessee brings to the knowledge of the auditor, he may not be able to reply. Now, even in such cases, the basic principles of justice is it doesn't matter. In the assessment stage, you could not represent. But even in the first appeal stage, you can, because the first appeal is as good as assessment only. All the powers of the assessing officer are coterminous with the first appeal commissioner's powers. So at least in this first appeal, one can properly represent the case and try to seek the justice. Because it is we who have filed the original return, but in the scrutiny, we could not follow it. Maybe for those who have not filed the returns also, this may happen. For example, a street corner school, government recognized school, every year deposits around say 80 lakhs, 1 crore, 1 crore, 20 lakhs cash, evenly in the 1 year period. But it never filed the return. So now the income tax portal insight, the cash deposits, a red flag will come to the assessing officer that in spite of cash deposits in the bank account, they have not filed the return, PAN number so and so. So the officer will try to issue a notice. Whereas the school will ignore income tax notice, never. They have filed the return. So with the PAN number, email ID, they issue the notices. They will not respond. They were advised by many people, the accounts writing people, your school means income is exempt. Where is the question of return file? Even in such cases, you can file the first appeal. But filing the first appeal, how best we can defend and ultimately claim the exemption. These are all the important things. And the third, I would like to say, a broad idea, broad say view of mine. In many businesses, the assessees, due to their peculiarity of the business, are not able to 100% maintain the books of accounts. So the turnover will be heavy, 100 crores, 200 crores, 500 crores. But the books of accounts are not 100% pakka. But anyhow, the auditor might have done the tax audit and filed the return. But when it is taken up for scrutiny, he cannot, and it's not proper to produce the books of accounts. So when the assessing officer asks for books of accounts, you said in the return you have filed the tax audit report, please produce the books of accounts.
Sir, Phalgun sir, are you running the PPT or are you in the first slide only?
Only introduction to
Sir.
see that there is this is such a beautiful topic where your imagination is more important than the procedures. So that
Yes,
first
sir.
part, I want to keep the interest of the audience in such a way that there are a good number of decisions which went up to High Court. Ultimately, this. After all, he has not maintained the books of account. What is your problem? He cannot substantiate his expenditure. What is your problem? The turnover, you agree? Then what is the real income theory? On the turnover, you estimate. Normally, the assessing officer will estimate 8%, 10%. But if you fight and if you have seen number of cases, the percentage will come down. In the first appeal, it will come down to 4%. If you go to the second appeal, it will come down to 2%, 1%, 0.25%, 0.15%. For the members' interest sake, I will quote one decision. Which in the Google anyone can search. No need of having any income tax, say, software. So, Chintan Niketan Bhandari versus DCIT. Chintan Niketan Bhandari versus DCIT, Ahmedabad ITAT. So, if they want the ITA number 495 to 500, the decision is dated 29/11/2022. Just like in Google, if you search. The assessing officer assesses the income, reopening such assessment, 7 years, each year around 300 crores, 500 crores, 1000 crores, 600 crores. Around for 7 years, 3,500 crores is the income assessed. Gross turnover in the bank account itself is assessed, confirmed by the CIT appeals. When it went to tribunal, the tribunal finally held, after all, the business of the assessee is checks discounting, checks issuing and checks discount. If somebody comes with the checks, they will give the cash, even in the midnight. If somebody with the cash comes in the midnight, they will issue a check. A single person. And his all family members' names, several accounts, all these things in the such they form. So ultimately, tribunal said each year on the gross receipts 0.25%. That means ultimately for 7 years, since of 3,500, the income assessed is around 5.25 crores only. The thousands of crores demand has gone, and ultimately tax liability will come to 1.5 crores. Why I would like to quote this in my initial thing? The way, the fact, the real income, the ultimately courts, the high courts, tribunals will try to assess the real income only. Then how to present this? How to get this much relief? How to get this much relief? That is the whole thing. You must go on pursuing. You don't stop with the assessing officer. The 2023 Finance Act has a not only the first appeal is CIT appeals, they have created under section 246 JCIT appeals also, Joint Commissioner appeals also. A new post of appeals has been created. So it is not our option to who, before whom. Automatically from the assessment order in the portal, if you go and try to file form 35, it will go according to the schema what they are having, whether CIT appeals or JCIT appeals. This is the first appeal. So after the first appeal, again, as per the constitution, still right of appeal is given. So the CIT or JCIT is nothing but executive authority only, not really pure judicial. So the assessing officer is an executive authority. The CIT appeals and JCIT also executive authority, but ITAT is the Ministry of Law. So it is not income tax department. Income tax appellate tribunal, though name is income tax, it's the Ministry of Law, central government. It is purely judiciary. Even if you are not satisfied with the ITAT, which tomorrow our learned speaker G.V.N. Harigaru is going to deal, and even if you are not satisfied with the ITAT order, no relief has come, or the relief what you got is not sufficient, then you go to High Court and finally the Supreme Court. That is the final. So that's how one should have the tenacity to litigate, to fight, and then get the relief. As I told you, the relief may be 90%, 95%, 99%, as I told you, 0.15%, 0.25%, number of nations. So ultimately sustain. So you must have the capacity to fight. The appeal may be on different aspects, which in another slide, say in the assessment, different aspects will be there. There is no exhaustive list, but anyhow, we can see the right of appeal to be construed in a liberal manner. So this is the decision of the Supreme Court, which says there is a right of appeal in the act they should give, not the term. It is a automatically. Once the right of appeal is given, it should be reasonably read, practically and liberally to be interpreted. That means a appeal procedure is there, appeal mechanism is given, then the appeal mechanism, how it should be interpreted. Because the assessing officer, when he is making the assessment, he one-side assessment. That means he only very rigidly ignoring your submissions, ignoring the evidences you are given. He would have made a high-pitched assessment. But when you go to appeal, slowly, because the income tax officer, the assessing officer and the commissioner appeals and the joint commissioner appeals, though they are executive, they are quasi-judicial authorities. They are bound to follow the jurisdictional high court decisions. They are bound to follow the Supreme Court decisions. They should be more pragmatic, because the act said treat the bank, any entry in the bank account is section 69, where for which the source is not admitted and which is not there reflected in the books of account, is under section 69 income. So number of 17, 18 assessment years, demonetization years. The portal has given this much cash deposited. Whatever the assessee submits, no, I am not satisfied. It is all unreasonable. That much cash is not possible for you to deposit in 1 day, 2 days, or in the first week of the demand. So high pitched assessments have come. So the real, though in the assessment orders as per the SOP, the assessment orders, the Sumti Dayal and Durga Prasad More, the two Supreme Court decisions have been quoted in all the demonetization cases. The human probability is that 1 day that much turnover, that 1 month that much turnover is not possible. So we make total cash deposited is equal to unexplained, say, receipt of money without source. But actually, number of decisions have come. So the appeals filed, the assessments were completed, scrutiny assessments 1718 were completed in December 2019. In January 2020, lakhs of appeals have been filed. Even now, around 5 lakh appeals are pending. But out of the majority relate to 1718 assessment here, they have not yet been disposed of, because the facts in the appeals are 100% in favor of the SSC. They are not able to dispose of. So the mantra, what I want to say, if the assessment order, if you are not satisfied, keep on agitating, even if your case is 50% weak, don't worry, 50% chance is there to win. With that hope, one should file the appeal. Actually, I have completed my 45 years of practice. In my 45 years of practice, I have seen five Vivad Se Vishwas like the income tax, say, cleaning, sweeping, say, schemes. So the income tax one-time settlement schemes will come, whatever may be the name. The latest 2020 is known as Vivad Se Vishwas. So voluntary disclosure scheme. So VDA. Like that, a number of schemes have come in the past 45 years. I have seen minimum of 5 schemes. So to whom the scheme will apply? Those who are litigating, those who have filed the appeal, those whose cases are pending, for them only the relief. Normally, in a jocular way, if you want to say, Raitu Runamafi, farmers agriculture loan write-off. Some 3 decades ago, it started from the center, and states are also following. Now the election season, so many will promise. To whom they write off? Those who have not paid the loan. Already you have paid, no question of giving you the relief. So like that, please try to file the appeal. Now, department after the assessment, department, can it file the appeal? See, because he is the executive, the assessing officer. Can the assessing officer made a mistake? Then what is the remedy? He cannot go in first appeal. Say only his remedy is the commissioner, he will give a proposal. So the commissioner under 263 will try to make a revision order. So that is only the thing. Whereas assessee many a number of times need not file the appeal. That also we have to see. Where if the assessed income is reasonable, real income, and the present from 1718 assessment year, the old 271C penalty has now gone, and now the addition is made in the assessment. Along with the assessment order, normally you will receive a 270A penalty notice, under-reporting cum misreporting. So now you have agreed with the income, but the immunity from penalty, if you want, within 30 days, you should pay the money and then file Form 68 before the assessing officer for granting immunity as defined in 270AA. Then you need not prefer the appeal. You should not prefer the appeal. Then that under-reporting also will be dropped if it is under-reporting. So the what is under-reporting? 270A subsection 6 is giving you 5 circumstances. And if it is a misreporting, 270A subsection 9 is giving 6 items as misreporting. Normally, the assessing officers, along with the assessment, will say his satisfaction in the assessment bottom line itself. I am also issuing a notice under section 270A, which is for under-reporting cum misreporting, read with misreporting. So According to you, it is only under reporting. But according to the assessing officer, it is misreporting. What is it you have to do? You have got two options. Either you file 270 AA immunity saying that there is no misreporting. It seems by mistake the assessing officer called it as a, so thereby I will not have the eligibility to apply for the immunity. So you file 68 and then try to convince the assessing officer that it is not the misreporting. So misreporting is, that's a filing inaccurate accounts or omission of giving the truth the for expenditure, no evidence, any evidence has not been filed for the expenditure, like that. 6 circumstances are there given 270 capital A 9 subsection. So if it is coming, then only it is misreporting. All these are not there. You have disclosed the correct income. You have say in response to maybe 148 notice, you filed correct income, returned income is accepted. Even then, because the original it is not filed, according to 148 only you have filed the return of income, the 270A penalty, automatically it is under reporting definition, it will come. But the officer may think that it is a misreport. Because I have pointed out something, I have identified the mistake, only you have come out. He may say this. So I am suggesting you, even if you agree for the assessed income for various reasons, if it is only merely under reporting, you file form 68 before the assessing officer claiming immunity. If he rejects, from that rejection again, because for example, after the assessment, 15th day you filed, he rejected in 45th day, but from 45th day again you will get 15 more days, because 30 days is the first appeal. So you can file the appeal after his rejection. This is one method. Or in the assessment order itself, he said it's a under reporting cum misreporting. So on that word you want to fight. So in the assessment, on the original assessment itself, you go for appeal. In the appeal, you say, I am agreeing with the income, the heads of income, the total quantum of income, everything. But it's not misreporting, it's mere under reporting. Finally, the Commissioner Appeals has agreed that it is only under reporting. From the day the Commissioner Appeals gives the order for that under reporting, you will get 30 days again to the assessing officer to file for immunity and then try to avail. So that's how, when you should not file, you decide. Then also, similarly, you are very confident that the commissioner will, within 30 days, you have not filed the appeal. But within 1 year, if you have not filed the appeal, you have got an option on the assessment to file for a revision under 264A petition with a very nominal amount of fees. So if you file the 264 petition, one of the conditions that you should not be, then CIT can entertain in that 264 petition. I gave you a case law, what it says. What in the assessment, what you have not claimed, also additional claim can be made even under 264. In the regular appeal also, what we are going to see, also you can make an additional claim or additional ground. But even before the 264, under 264, what you could not raise before the AO or not claimed in the return, you can go for 264 petition. That is also another way. Now, once you file the appeal, can you withdraw? No, it's not in your hands. You may say, but it's not in your hands. The appellate authority only in its discretion may allow the withdrawal of appeal. Otherwise, say, for example, on a penalty, you file the appeal. By that time, you are in the second round of tribunal on the original assessment. Tribunal 100% removed the addition. When the tribunal removed the addition, by the time though this penalty is levied, so you can go for penalty appeal and then say, sir, already the tribunal has given me the relief that there is no addition, sustainable addition. Then a penalty automatically will come. So like that, there may be a chance. So once you file the appeal, you may file a petition, sir, I am withdrawing my appeal because there is no necessity. Already the relief I got in the original assessment. So appellate authority in its discretion may allow the withdrawal, but it is not the power of the. So the AO's order just glimpse of this thing. If you are satisfied, pay the tax and keep quiet. But in the assessment order, original assessment itself, not only for the income to be assessed, you should fight, but also your submissions, you should keep in mind that 200% of the tax, what for? The misreporting penalty. So the assessment will not end with mere paying of tax with interest, but you should keep in mind the 200% of the underreporting cum misreporting penalty you should keep in your mind, and then try to present the facts. That's how I say. So that's why in the beginning I told you, in the assessment stage, the strength of the SSC, the facts, you should have thorough understanding on the facts. If you can sustain what the return you have filed, you can argue and try to prove at any level, then only you go for that. Otherwise, say you go for income estimation. The biggest advantage in the income tax aid, the income has to be assessed. Income has to be estimated and assessed. So in wherever you say my books are not reliable, I am not able to produce the books of accounts, please estimate my income. So then whenever the income is estimated, it will not become misreporting. The old 271C also will not get attracted because the income is estimated. So here the underreporting only, it will become underreporting only. It will not become misreporting whenever the income is estimated. So you can avoid the penalty better. And the other precaution also, just I would like to make a passing reference. Majority of CAs, whenever a 148 notice is given, immediately as a chartered accountant, our mind 90% is tuned to prepare the books of accounts, bring the bank accounts, come on, prepare the books of accounts. By the time 30 days time, what they give will not be sufficient. Now under 148 capital A, they are giving 90 days time also. Even 90 days may not be, because SSC has to gather maybe 5 years back, maybe 9 years back data. So rather than that, my advice, though it's not written in the Income Tax Act or it's not a writing on the wall, my advice to you is, the moment you receive a 148 notice, if a original return is not filed, better within the given time, file the return. Why? Because it's a 5 years back, 6 years back assessment year, maybe 15, 16, maybe 13, 14. So now if you are receiving, better, you file the return with a real income theory. Forget about his 5 crores turnover, 10 crores turnover. What would have been his real income, business income? If it is a regular return with your audit report, the return may not get uploaded easily unless you do some gimmicks. Otherwise, say 148 notice, whatever the return you file, it will simply accept in response. You file the real income. Why? Because for those earlier years, the 230A interest, 1% per month, 60 months, 70 months, 90 months, 90% of the assessed tax 230A in addition to B interest. So you can avoid the 230A interest the moment you file the return in response to 140. File the return, but with the minimum facts to ascertain. Don't file casually some income, a real income. What would have been the probable income? What would have been that business given probable income? Not based on your P&L account, not based on your this thing. You try to prepare single entry balance sheets for all the 6 years. Then based on that single entry balance sheets, the increase in the capital you admit as your income. File the return. So I am now not pakka books of accounts. I am only preparing a balance sheet as on 31st March. So I can prove my balance sheet is right. Then definitely you can save it. So the other way, if the assessment order, you are not satisfied, you are aggrieved by the assessment order, then file the appeal. So the order, is it appealable or not, you verify. Some of the orders, not every assessing officer's order is appealable. Some of the assessing orders only. For example, yesterday we have seen the Kapil Goyal sir said 148 capital A small d order is not an appealable order. At best, you can go to a writ jurisdiction. That is under Article 226 of the Constitution. You can go for writ mandamus. Only 148 capital AD order. What is that order? In the inquiry, preliminary inquiry, he concluded that income escaped is say 1 crore, 2 crores based on the bank credits. So you say, no, I have presented all the facts. He has not considered. Simply his first version only he has taken. And so you go for a writ jurisdiction if you have discharged your duty properly, explained sufficiently that this is the income, not taxable. Based on the sub-registrar office registration document, you would have issued a notice. Because from the sub-registrar office, the details will go to the assessing officer. Based on that risk management RMS system, say they will issue a notice. You will say it is an agricultural land. No, he will say, no, it is not an agricultural land out of the section 214 capital asset definition. It is a capital asset, in my view. So the total capital gain escaped, he may say. So when you have presented all the facts and he has not considered, no appeal on 148 capital AD order, in pursuance of which on the same day he will issue a 148 notice. So if it is such a high demand and if the assessee is capable of fighting, better you go for a writ jurisdiction. That's why you are having in every high court number of writs on 148 capital AD order. Yesterday, our friend has deliberated. So some orders are not appealable, some orders are appealable. What are they? What are they? And the assessee can file the appeal, or the deductor, because under TDS and TCS sections also, if there is a violation, an order will come. The normally income tax assessees only will become the TDS deductors or TCS collectors, but actually under the Income Tax Act, that is a separate code. So every government officer also, DDO, drawing and disbursing officer also, for example, Railways Department, so many DDOs will be there. So on them also some default, some assessment will be done, and assessee in default, they may come. So the assessee or a deductor, it is covered under 248 actually. So assessees are covered under 246 and 246 capital A. So they can file the appeal. Now, appealable orders, if you see, the 143.1 or say 143.3 scrutiny assessment, or say reassessment under 147, rectification 154, or say the representative assessee 160. For example, for a foreign person, he is having a house building in India. You paid the rent. You are not a business person, but that foreign person has not filed the return. So the person who paid the rent will become an agent of that foreign person. So 163 notice will come and they will do the assessment, representative assessee. Or 159, a person died, his legal heirs will become legal representatives. There is a difference between the word legal heir and legal representative. Income Tax Act is not dealing with the legal heirs. It deals with only the word legal representative as per section 159. 159 refers to the definition of the legal representative. 229. The 229 refers to the Civil Procedure Code, which says whoever inherits the estate, not even inherits, whoever deals with the estate of the deceased, whoever deals with the estate of the deceased is the legal representative. Normally, the assessing officer, without understanding, going in depth of this, your father died, no? Okay, I am issuing a notice to you. You are the legal representative. Come on, file. So it is a number of decisions. The officers also, even now, even 1 month back, I received notices on a person who deceased, they issue a notice. On a company which got demerged, nowadays amalgamation, merger, so many. So because the portal data will come, that say transition period, some TDS, some say advanced tax, something will be there for which no return is filed. So issue a notice. Then you should say, no, sir, the company is not existing, and a company not existing, and a person not existing, you cannot issue a notice. You should go to 159 and then see that section 170, 171, for example, the 185, you should see a partnership dissolved. There are deeming provision that the partners, erstwhile partners who are there as partners at the time of dissolution are deemed to be the representatives, and on the firm they can issue a notice. So like that, HUF partition has taken place. Unless the HUF was assessed earlier under 171, the notice cannot be issued to the co-partners of the SOL HUF. Like that, the technicalities also one should be very careful in understanding. So where search cases 153A, and in search some material relating to third party 153C, notices will be there. TDS, TCS, the defaults where the assessee in default order has come, on that you can file the appeal. And penalties. In the Income Tax Act, around 40 penalties are there. It is a separate chapter. And all the 40 penalties, you can make a appeal. But I would like to draw your attention that around 30 penalties out of the 40 are covered by Section 273 capital B. What is that? Penalty need not be levied if the officer is satisfied that there is a reasonable cause for such default. For some default, the penalty is levied. For not responding, for not filing the return, for not responding to notices, 142.1 notice, or so many things, for not filing the audit report, for not maintaining the books of account, so many things. That is like underreporting. But in this underreporting, misreporting is not covered by this 273B. So 273B covers only 30 penalties. Some 10 penalties, it is not covered. So the reasonable cause word, lot of decisions, a lot of what is meant by reasonable cause. Supreme Court in number of cases said it should be interpreted liberally. So if you have that reasonable cause, file the appeal in the penalty, and but keeping that word reasonable cause in your mind, in the assessment stage itself, keeping that penalty notice after the assessment for the reasonable cause. Assessee due to ill health could not respond the earlier last month 142.1 notice, but a full reply I am giving now, covering that notice and this month notice. You go on pleading and placing some evidence during the assessment stage itself. You cannot, after receiving the penalty notice, search for a reasonable cause and then plead. No afterthought. So you should be very careful how to come out of these penalties during the assessment stage itself. I will the term do something. Similarly, tonnage tax scheme. See, for some peculiar businesses, you are having that 115 is a tax rate section. Number of around 20 to 25 different tax rates is there for flights, air freight, for cargo, for oil drilling. There are tonnage taxes known as. So are effect of these say international transactions you have done, and so the DRP proceedings will be there. So this 93 CD will apply. They are all the appealable. So denial of liability. What you will file the appeal to deny your liability. Maybe the status you have to deny. Maybe the heads of income you have to deny. Your refund has, it is a refund order. For example, the election season, cash is seized, and ultimately it is a center circle scrutiny assessment. You produced the evidence right from the first day. Ultimately, you have succeeded. Your money you have to get with the interest. The refund order will be the only preliminary seized amount in the 6th year, 10th year, 11th year. They will give the seized amount without interest. Normally, you have to fight. Again, file the appeal saying that your refund order is without interest, which I have claimed right from the beginning. I have succeeded. In the first appeal, say the addition made in the assessment is removed. So now give me the refund with interest. On that, for the refund order, again you have to file the appeal and fight. So the double taxation avoidance agreements. So the treaty benefit is not given because the treaty supersedes the Income Tax Act. Any double taxation avoidance agreement, the India has entered almost 70 to 80 countries. The India has entered into double taxation avoidance agreement. So the double taxation avoidance terms supersede the Income Tax Act. That benefit the income tax officer is not able to understand and give. Then better you file the appeal. So like that, on technical grounds, the jurisdiction of the SSC assessing officer. So jurisdiction, without jurisdiction, the assessing officer passes the liability, the assessment order. On that also you can fight the appeals. So the directly ITT, what you cannot file, I told you, the CIT has revised the original assessment order. Then CIT revised 263, you must directly go to ITAT, not to the CIT appeals. You have the right of appeal, but to CIT, because a commissioner's order, principal commissioner's order, CIT appeals cannot review, same rank. So you should go to tribunal. Similarly, nowadays, trusts, the earlier up to 21-22 assessment, you are having a section 12A, subsection 3, the cancellation of registration. Now, from 22-23 assessment year onwards, 12 capital AB subsection 4. Your application provisional registration also can be say recalled. So that means rejected your regular registration application, or regular registration application in the scrutiny assessment, maybe in the third year, they found that the trust is not as genuine. Trust objectives, as per objectives, it's not working, or it has violated some other law. So they have given some 6 reasons. The sixth reason, 2023 Finance Act has beautifully brought in. What is that beauty? In the 4 years back when you got, maybe in 2021 when you applied, your application is defective, false, erroneous, then also the registration can be cancelled by the commissioner. So in 2023 Act, 6th reason they have added in this 12 capital AB subsection 4. So that CIT exemptions are rejecting of application or cancellation of registration orders directly to tribunal only you should go. You cannot go in the first appeal. So similarly, 144C, that's also, as I told you, dispute resolution panel, the international transactions, you should go to tribunal. If you want to, on that order, if you want to go, it's not the first appeal, you should go to this thing. So, sorry. The agreed assessments, no question of you filing. What is meant by agreed assessment? Earlier in the physical assessments, for drawings, I will want to make some addition. Yes, sir, I agree. Now, please add shortage of drawings, family drawings, 1 lakh rupees. When you say in the assessment order, physically you as authorized representative signed and agreed. Now in the facial assessment also, you yourself propose, yes sir, I am a contractor, civil contractor. I am a real estate businessman constructing. I could not maintain proper books of accounts. My turnover is this. On my turnover, I admit 8% income. Finally, though he proposed 12%, you cited so many case laws, so 8% admitted. What you have admitted, on that you cannot file an appeal. So it becomes a agreed assessment, number of case laws. Then, as per SOP is issued, show cause notice. In the assessment stage, show cause notice is a must. What is that show cause notice? Before the final completion of the assessment, as per the principles of natural justice, a show cause notice has to be given. In the indirect tax practitioners, you know, it was there in the VAT law also, it is there in the GST law also. Without a show cause notice, a final tax order cannot be levied. So in the Income Tax Act also, now the 144B, the faceless assessment, the provision is made that finally before completing the assessment, a show cause notice shall be given. It's an obligate. So it's now become the right of the assessee. Without show cause notice, they have done. Then also, because in the filing of appeal, 50% technical grounds, the notice itself is invalid. Beyond 3 years, you cannot give a notice if the income escaped is less than 50 lakhs. So for less than 50 lakhs income escaped, you are given a 148 notice. No. So like that, on technical grounds, you can go in appeal. We're reopening. Already in the original assessment, I have given all the full disclosure. Again, you changed the opinion. So you cannot. So these are all the issues. Just I will give you some practical things. Practical things. You should say note these points, which are all very, very important in the sense the jurisdictional issues or wrong issuance of notice, or if you had filed the return without issuing a 143 notice within the prescribed time of 6 months, without 143 notice, directly 142(1) notice is given, then also it is invalid. First 143 notice should be given if at all you have filed the return, and then only 142(1) notice shall be given. So similarly, additions on the merits. So the additions made are all assumptions. Maybe every fact will have 2 sides. From the assessee side, what he has done is business necessity. From the officer side, no, it's not a business necessity. So I try to disallow some expenditure or disprove the genuineness, the officer may say. So normally, for example, expenditure, please prove your expenditure, 1 notice will come. What is expenditure? Any expenditure normally is a contract between the payer, the assessee, and the payee, the receiver. So there may be an agreement for such expenditure. There may be an invoice raised by the recipient in the name of the assessee. After invoice, internally, you will pass the voucher, issue a check, the payment is evidenced through the bank, and a receipt might have been given, a confirmation would have been. But during the assessment stage, you produce some evidence for expenditure. You produced only one bank statement saying that, you see his name, this is towards the rent, this is towards some expenditure. You produce some evidence. Why I am keeping this word? The assessing officer satisfaction. No, all the required. I asked for the agreement. Without agreement also, I would have incurred the expenditure. So the some evidence you produce, thereby that 270 capital A9, any expenditure for expenditure is not substantiated by any evidence. The third limb of that is 270 capital A9. Any evidence means not even 1%. Nothing, zero. You produce some evidence, then it is only under reporting, not a misreporting. So like that, you should keep in mind these penalty provisions also, like that the additions, what evidence you have produced, like that you should see. And violation of principles of natural justice. Number of case laws are there. Income Tax Act, not a single word you will find natural justice. Principles of natural justice, you will not find a single word. But whereas the income tax case laws, if you search, hundreds and hundreds of decisions, this is the natural justice, this is the natural justice. Number of case laws are there. So what is the principles of natural justice? Giving a reasonable time. If you sought adjournment, you should give a reasonable adjournment. You cannot say, I cannot give. You can seek 4 times, 5 times adjournment. Doesn't matter. He has to give. And similarly, whatever the evidence he gathered, he should produce to you and then give an opportunity to deny that. So all these things are granting copies of the material relied upon by the department, or the income tax officer has recorded a statement of a particular person, third party, and you should file a petition saying that I want to cross-examine. You examined the evidence from your side. Give me the opportunity to cross-examine that person. I give you a very funny example. For example, you borrowed some money, and during the assessment, section 68, prove the borrowers, unsecured loans. You filed the confirmation letter, their Aadhaar, their PAN number, their letter, their bank account. You filed, and without your knowledge, the officer will send his inspector, record a statement from that fellow, his capacity. So the inspector will put some questions and will say, sir, he is a private employee in a hotel. His salary is 25,000. So he puts only 2-3 questions. What is the income for you? I am an employee. I get monthly 25,000. What is your family expenditure? Sir, my family expenditure is around 20,000 per month, sir. That's all. 2-3 questions he will get, and he will come back. Based on that, officer will say, he has no capacity. I got the evidence. I got a statement. But you as a representative, you say, I want to cross-examine. Please issue summons 131. If the officer issue, he is bound to issue. If he is not issuing principle of natural justice violation, the assessment order is a void ab initio. If the principles of natural justice is not followed by the assessing officer, the assessment order itself will become void ab initio. So you should argue in the appeal. So if you cross-examine in the assessment stage, you will say, you will not ask just like inspector. You will ask first, what is your wife doing? Sir, my wife is also employee. She is also getting. Who will meet your family expenses? Sir, my wife also will meet my family expenses, sir. How many children are there to your father? Sir, my wife is the only daughter. What is the income of your father? Is your family expenses met by you only, wife and husband, or somebody else? My father-in-law also. So you get all the positive answers. You are cross-examining the income tax in the presence of income tax officer after he issuing the notice. You are extracting these evidences. So your positive evidences will come on record based on that only holistically issues. Just like that I say. So like a number of situations are there. So wrongful levy of interest 234 B or C, on that also you can file in appeal. Non-grant of credit of advance tax, self-assessment tax, TDS. Sometimes it will be a issue. On that also you can file an appeal to get this wrong status of this. So the SSC is a partnership form. You have proved it. You filed the partnership date. It has been assessed earlier. but for some reason there is a change in constitution, you cannot file, then they will stay AOP. If it is AOP, 40 small b interest and remuneration will not get allowed. So like that, wrong head of income, you filed a business head, say for example, shares transactions to set off the losses, he may say the capital gains head, or if you file capital gains, he will say business. So the underreported income is taken as misreported, as I have already told you, and that also you can file. Penalties levy is unjustified. Number of penalties, number of cases you can. For example, one or two for just for members updation. In the old regime, that's the 271 1C, concealment of income, number of decisions in favor of SCR. The 271 1C notice is having two limbs. What is 271 1C? Whether concealed income or furnished inaccurate particulars. They have not struck off any one of these limbs. Just like that printed notice as it is given. Number of decisions say consistently, if nothing is struck off and finally the penalty is levied on concealed income, why you are not struck off that furnished inaccurate particulars? So if a limb is not struck off, the penalty, however genuine it may be, penalty is not sustainable. Penalty proceedings are different from assessment proceedings. An addition which the assessee accepted has not preferred any appeal on the addition, it doesn't mean automatically penalty also is liable. Number of additions. So the penalty technicalities. For example, in the past 3-4 years, if you see that misreporting, simply for underreporting or misreporting, notice is given. What the officer should have done? Officer should say, it is an underreporting cum misreporting as per section 270 capital A subsection 9, so and so class A, B, C, D, E, F. Which class? Subclass he should mention. If he's not mentioning, automatically in the appeal, if you properly say, for example, the famous decision on this 271 1C, which applies for this in Bangalore Tribunal, I got 2 months back, same point I argued and we got the relief. The earlier based on the Karnataka High Court decision in the Manjunatha cotton and ginning factory, the Manjunatha cotton ginning factory, a famous decision on the penalty, how it should be dealt, basic principles of penalty, Karnataka High Court. So like that. So the technicality base also penalty, number of times the penalty. For example, a classical example I will give you for members' sake. No books of accounts, no audit report is there, turnover is there. Sir, it is a search case. I have not filed the returns. You yourself unearthed my turnover. It is 10 crores. Doesn't matter. In Ballari, the illegal mining, whole world knows that iron ore from unknown people, many people bought the iron ore, exported through Vizag seaport, through Goa seaport. Iron ore is exported. No return is filed. 500 crores, 300 crores turnover. So the income is ultimately when they give the notice, sir, 2%, 3%, sir, there is a Minerals and Metals Development Corporation. It is also mining and doing Pakka government corporation doing, sir. They are getting 2% income. Then a private person, I have done an illegal business. I have no license for mining. Then when they get a licensed business 2%, my income should be 1%. So ultimately 1.5%, 2.5% income is assessed. Then penalty. No books of accounts, turnover, you have done the business, you are not filed the audit report. Number of decisions say, when the assessor himself said no books of accounts, where is the question of audit? For non-maintenance of books of accounts, 44AA, 25,000 rupees penalty only. No question of that 1,50,000 rupees, half percent of turnover, this, that, no rules will apply. When basic mistake, impossibility of performance, I may myself said no books of accounts, then where is the question of audit report on 271 capital B penalty will not be there. Only the 271 capital A, that is a non-maintenance of books of account, 25,000 penalty will go. So technicality. So we should be capable of understanding all these things. So legal objections, the appealable orders, I have told you. The interest, 220 interest is charged on that also. You can file an appeal or the stay after the original assessment. The 20% you should pay is the CBTD circular. says if you pay 20%, the assessing officer for 80% can grant stay till the disposal of the first appeal. If you are not able to pay 20% also, you can you can file a stay petition. On the rejection of the assessing officer stay petition, again you can go to the regular commissioner and say, sir, you please consider. Normally the regular commissioners will grant installments till the disposal of the first appeal. That's the best way. If you are not satisfied, you can say your genuine cause and file a appeal also on the rejection of a stay. So the 248 is a tax deductor or tax collectors whenever they fail to be the SSC in default. So it is also appealable order. Or sometimes though I am the director, directee has already paid the money. Though I am the director, I fail to direct. Then he has already paid. Where is the question of I becoming a SSC in default? This is the case laws. And so the legal representative, as I told you, 159 number of cases on the deceased person, they give the notice. In fact, the decision says, Supreme Court says, it is not the duty of the legal representative to say, sir, you issued the notice to my deceased father. It is not the duty of the person. It is the department's duty to identify whether he is alive or not. How can, without they saying, the persons who inherited, without they say, the law says that it is the officer's duty to identify the correct person on whom the notice has to be served, and then only they will serve the notice. For example, a peculiar circumstance, just one or two I say. You have got a client, assessment is over, you file the appeal. After you filing the appeal, because 2 years, 3 years, it is taking time now, the person died. Then what the law says? If the person dies, tomorrow also you are going to see in the tribunal. The first appeal form 35, second appeal tribunal form 36. In the tribunal, you should file a revised again form 36. Again here also form 35 revised. Now mechanism has not been enabled now, but now you should bring to the notice of the appeal commissioner, sir, the assessee died. Now his legal representative is representing, I got a new wakalat, please allow me to file the revised form. Then only legally it is valid. Otherwise, on a deceased person, if the appeal order is given, it is also invalid. It is the duty of you as a representative. Your wakalat also is a power of attorney. Any power of attorney, the executor's death, power of attorney will come to zero. So that's how one should be careful. Just I am giving you some of the practical things. So now we are coming to the crux of the problem, that so what is the process of filing the appeal? You must study the assessment order minimum 3 times according to me. First sentence to last sentence. Why I say it is not written in the act. My experience I say. Every word you read, the intention of the assessing officer, what are the lapses from the view of the assessing officer. So you can try to understand, just like you are preparing for an examination, any subject, any student, with one reading of the textbook, can he go and write the examination? No. Minimum 2-3 times he will read, then digest, and then write the examination. Your appeal is also an examination for you. You should read the assessment order number of times with reference to how many notices given, for which notice, what is the evidence he has filed. You would ask something, he would have filed something. I give you a very beautiful, my practical experience. I want to quote 2 peculiar assessment orders which I have dealt. 2 peculiar assessment orders. Normally, the income tax officers nowadays also assume that any product, maximum from 5% GST, 12% GST, 18%, maximum 28%. Is it the end of the day? No. If you talk of cigarettes, 28% GST plus 72 to 73% is the cess. So the income tax portal, it says you have reported 200 crores turnover. In your bank account, say 350 crores deposits are there. That too cash deposits. So the remaining 150 crores, I assume the unexplained sources money, assessment order is. During assessment, a number of replies were given saying that, sir, CA Institute itself has said, exclusive method, only the basic sale price I have to report as turnover. My purchase also are the basic purchase price only. And the purchase also I paid the GST. And sales also I collected the GST. GST as if on behalf of the government as an agent. I have taken as a creditor or a personal account, not a nominal account. So the personal account debits and credits received, credit, paid, debit. So where is the question of say escaped turnover, escaped income? No. So the practical things, well, the assessing officer finally, it is faceless assessment. The assessing officer could not understand there is a possibility of 100% of GST in the name of cess also. Ultimately, government collection, indirect tax only. They could not believe. So there are peculiar circumstances like that. So then you have to fight in the appeal, bring the fact to the assessing authority with proof. Maybe GST or 3B. 3B is the annual summary, total GST collected and paid. Your GST are 9C, all these things which are available in the portal. I'll give you a password, you check up whether I have collected or paid or not. It's a proof. So like that, one should argue. So they examine the section under which the order is passed. Why that examination of section is so important? Section is so important. For example, they gave 6 notices. You answered for 5 notices. For 1 notice in between, you could not answer. So for that one notice, what you have not replied, they will say 272 capital A subsection 1 subclass D failed to respond. Why can't I levy penalty? If you go to the beautiful case laws on that particular penalty, if the assessment is 144 assessment, non-compliance penalty is 100% valid. If the assessment is 143.3 scrutiny assessment, no question of penalty. None. You yourself say that he is complied fully. That's why you passed the 143.3 order. Where is the question of non-compliance? At one time, reasonable cause, he explained. So no question of penalty. So like that, the section under which the order is passed is more important. Similarly, examine the pros and cons of going into appeal. In some of the cases, because the CIT appeals first order, first appellate authority or JCIT now is coterminous. The powers of CIT is he can enhance. Next slide I am going to show. He can enhance in the assessment, something is added. You go in appeal. He can enhance the quantum. He can reduce it. He can enhance it. So he can. It is coterminous with the assessing officer's powers. So if your case is weak, better keep quiet. Don't file the appeal and pay the tax and keep quiet. Be mindful of this thing. You should have 100% grip on the facts. So amount of demand involved. They check the tax calculation, and if you find it wrongly done. Nowadays with this faceless assessments, see the faceless assessment, as you all know, 4 different units: assessing unit, technical unit, review unit, verification unit. So the show cause notice stage, what that review unit has given in the show cause notice, ultimately when you complete the assessment with a lower income also, the show cause notice computed tax automatically will become. So there is a difference between. Then file a 154 petition, it's sufficient. Not necessary filing the appeal, only tax calculation mistake. So read the order passed by the AO again and again very carefully to find out the points for your grounds of appeal. When you are filing the appeal, statement of facts and grounds of appeal, you are going to draw, which is very, very, very relevant. So it is an art to draft the statement of facts and grounds of appeal. In fact, CA Institute in 2021 has brought out a technical guide on filing the first appeal. You go through it. So the art of drafting, putting the same facts, one word should not be more or one word should not be less. So how to draft these things? If you want, you should read the assessment order with the evidences already filed. Then alone you can draft the correct grounds of appeal. Now, what the homework you have to do before filing the appeal? So arrange all the notices received in the Excel sheet. On which date the notice is served, date and time given. As I told you, the principles of natural justice. In some of the notices, 2 days given, 1 week given. Those 3 days are nothing but Saturday, Sunday, or Friday a holiday, or Monday a holiday. So like that, short notice as principles of natural justice, your notice itself is invalid. Based on that, you made this. Or the final notice, only 3 days time. Actually, today is 1st of May. I received a notice for a big assessment, a final notice on 26th of April. They gave 29th as the last day. I filed on 27th, 26th notice. Immediately as they brought to my notice, on 27th itself, I filed these return submissions. 29th, I got a favorable order. So it is a favorable order, I accept. If it is an unfavorable order, it is a very good point. You gave 3 days time. 29th is a Monday. And I could not respond before 29th. You passed the order on 30th April. Then it is a very, very unfair. So like that, you will have. So the notices given, responses given, the time given, whether all permissions. For many of the notices yesterday also, Kapil Goyal was saying that if it is above 3 years, chief commissioner has to give the permission. If it is below 3 years, principal commissioner has to give the permission. Which authority, when he has given? So the notice validity itself, you can verify on technical grounds to fight the case. So whether reasons are recorded before this, as I told you, there should be a reason. There should be, it is not the old law, reason to believe is not equal to reason to suspect. So he was mentioning the GK and drive shaft, all the other things where the reason to believe is as a normal person, you should have a positive evidence of violation. That is the reason to believe. You have only a small error. It is only a suspect, reason to suspect, not to reason to believe. So it cannot be. So that is the same. Study the strength and weakness of the case. Then homework. So where I have 54 slides. So far 7:30, 19th slide I am. So I will quickly go through. So the 143 notice has been issued after filing the written or not. You check up whether reasonable opportunity of being heard is given on your case or not. Check up whether any of the notices issued by the AO remained unanswered. If by chance you have not answered, you have a reasonable cause why you have not answered. You would have taken time in the portal itself. Do you seek adjournment after for every notice? Immediately one line will be there. One say pop up this thing. So seek adjournment. Give the reason. Not even a letter. Just electronically you can seek adjournment. All these things whether you have done or not. So you should be very prompt. Whether you fail to present a reply particular notice on prescribed date, you try to ascertain the reasons. Prepare the date-wise Excel sheet. All these things I have already explained you. Whatever the evidences already you have filed, because in the appeal stage also additional evidence you can file. We are going to see what is additional evidence, why you could not produce during the assessment, some reasonable cause, and how the additional evidence is valid and important for the disposal of the first appeal. You should be very cautious. So that's how. So you should be able to see all these things. So the demand is as per section 156, demand notice should be there. And many number of times without demand notice, if the order is given, it's invalid. The assessment order includes the computation sheet, and assessment order plus the demand notice both should come. Then only it is valid demand. So the assessment order date also is more important. If it is a time barring assessment, the assessment order physical date may be there. The digital signature below that is after 3 days, 4 days. No, sometimes portal mistake, this, that they will say. It is a time barring. So like that, you should all the important points in the assessment, you should note down. For each point, you make a separate ground. Whatever the lapses mentioned in the assessment order, try to take a separate ground and try to defend yourself. So if the assessment officer has mentioned some case laws in his favor, be ready to say that your facts and circumstances are not fitting into that department relied case law and your favorable case law. You be ready, but you need not quote that your favorable case law in the grounds of appeal or in the statement of facts. You should not. But in the written submissions, when the appeal has come for hearing, you should be able to quote so that you make a ground. So similarly, the additional evidences, if you are readily having, along with form 35 itself, you can file. In form 35, there is a particular column. Are you having any additional evidence? Yes, you say, and try to attach it. And the date of service of the notice, because within 30 days only you have to file the appeal. So drafting the statement of facts and grounds of appeal drafting. Again and again, nowadays ChatGPT also will draft the statement of facts. If you give some facts, the ChatGPT's beauty is, if you ask about Nitta Ravi Kishore, a beautiful personality, please write a poem in Telugu. In half a second, it will write a beautiful poem, ChatGPT. So based on that ChatGPT, if you try to draft statement of facts, it is not correct. You go through the facts, you try to present. In the statement of facts, what you should do is, some facts which are not mentioned in the assessment order, which is a fact, try to bring down. The facts favorable to you, you try to mention them. And then don't argue saying that assessing officer wrongly done it, assessing officer has not considered my evidence. Don't, the argument should not be there. Facts as a narrative, serial numbers 1, 2, 3, 4. The facts you put in the statement of facts. The statement of facts 1000 words. If it is exceeding also 1000 words will fit into form 35. Form 35, the appeal form is online form. The moment you give the assessment order, file the appeal, it will say, go to the forms, then select the form 35, drop down, and try to file the appeal. So fill up the statement of facts without any specific characters, the normal words. So you fill up if there are 1000 words. If it is more, as an annexure also, you can attach the statement of facts. Similarly, for a grounds of appeal, for each ground, some 500 words will be there. So if it is more also, you can attach a grounds of appeal. Otherwise, you can fill up these each ground under which section and which is the subject matter. You have to do it. So for statement of facts, I have given a number of precautions. So the actual mistakes done by the assessing officer, don't say it is a mistake, but the assessing officer interpreted like this. Assessing officer noted this as, taken this as this, like this. So like that, the facts you try to mention in a chronological order what all has happened. So you try to narrate in the statement of facts. So the lack of proper, yes, the assessing officer has given 2 days time. The assessee could not respond. Like that, you should say, because you are going to argue a point, the lack of proportionality, principles of natural justice is a ground. But in the facts, you tell like this. So like that, relying on the material. See, he collected some material, he has not given the opportunity. But it is a ground you are going to take. But in the facts, you say, on so and so date, he collected the evidence, and it has been shown to me, sorry, it has been mentioned in the assessment order, but has not given me the copy of the same, like that. So the grounds of appeal, we are going to see. So the denial of the liability, grounds of appeal is so serious. One should be very, very careful, because you may have for one point 2, 3 alternate arguments, not necessarily one straight argument. You consider this in the first ground. Assuming but not admitting, second ground, saying that if that is not accepted, at least this you should accept. Again, take third ground, assuming but not admitting, that even if it is not there, again you can go for another argument. So the grounds can be alternate grounds also. Don't leave all these things just to only straight one ground, and then you may fail. But you should take 2, 3 alternate grounds. For example, if you want a practical example, if you want me to give, for example, a trust case. Say, for example, educational institution, up to 5 crores 1023C small 3 AD exemption is there. Now you got a 12A registration, 12AB registration. So the assessing officer ignoring 12AB registration without giving section 11 exemption, you filed the return claiming 12AB because the audit report is delayed, no condonation you applied, he has not given the exemption of section 11. Then, grounds of appeal on the assessment order, what you have to say? I am eligible for 12AB registration. I have got already 12AB registration. I am eligible for section 11 exemption. I claimed it in the return of income. He has not given. So maybe after filing the appeal, you got the condonation. It may be 6 months. So like that. Second order, assuming but not admitting that I am not eligible for section 11 exemption, but I am eligible for 1023 small 3 AB exemption. At least this should have considered. My turnover is less than this thing. I am solely existing for education. My objects are this. That you can say. So like that, alternate grounds also you should be able to listen. So the grounds of appeal, the precautions to be taken. So every issue, for each issue, you should take a separate ground. And so the alternative plea, as I have explained you. So errors in the computation of tax also you can mention. The interest calculation errors also you can mention. And finally, a prior should be there. Final ground. What is the final ground? A prior to amend, add, amend, alter, or withdraw any ground must be made as the last ground. First ground is a general law, ground law, question of law and facts erred by the assessing officer. But all the other issues, though you give seriatim, the last ground must be there, because you don't know when the case has come up for hearing. In your favor, some decision would have come. that you can take as additional ground during the course of appeal proceedings itself. You can file additional grounds with the prior permission of the CIT appeals, a separate letter and a separate ground. Because for that, there should be in the first stage itself, you should have that flexibility, that provision you should yourself should make as the last ground. So the procedure e-filing, now earlier physical filing, physical arguments, mistakes, correction, all these things, form 35 mistake also can be corrected, all these, but now the documents you have to file online. So the assessment order copy, though it is available, see form 35 to some extent is a pre-filled form. Once your income tax portal you log in and then go for form 35, automatically your name, your PAN number will come, and there it will say which DIN number you are preferring this appeal. For which assessment year? For one assessment year, there may be 2-3 DIN numbers. Or say, for one assessment, different assessment years, all the 6 assessment years, one day only assessment orders are passed. Then you cannot file all the 6 appeals at a time. For 6 assessment years, they are given 6 orders on one particular day completed this scrutiny assessment. But you should first file one assessment year appeal. And when you are going to file the second form, again, after coming out, submitting the form 35 with the digital signature or say OTP, again, after coming out, again, when you are filing the second appeal for the second assessment year, you should, there is a column, are there any pending appeals? So immediately few minutes back, what you have filed the first appeal, you should mention in the form 35. So like that, for each assessment year, additional evidence may be ready, additional may be separate, grounds may be separate, statement of facts may be separate, they cannot be the same. So like that, you must keep ready all these things. So if it is a penalty appeal, the original assessment for that also, because all the penalties generally will arise out of the assessment. Without assessment also penalties can be there. For example, 271D, 271E, more than 20 lakhs borrowal, more than 20 lakhs repayment, or for the violation of 269 ST, more than 2 lakhs of transactions. So there need not be an assessment. Irrespective of the assessment, the penalty is levied. So if it is a penalty appeal with relation to an assessment, that assessment order also you should attach in the penalty. If there is delay in filing the appeal, you should file a separate condonation. There is a column in that form 35. You should pray for the condonation of delay and attach an affidavit always that there is a reasonable cause. Due to this, I could not file the. There are a number of judgments. 200 days, 300 days. Delay is condoned. I am giving you one of the citations, latest last month one on the delay condonation. A beautiful decision has come, and that also I am going to share with you. So now details needed for e-filing. You first of all, you to go to the portal, you should have the income tax login ID, password, address. There is a mobile number and email address. Once again, though in the portal that mobile number and email address are available, the practically at this moment of filing of the appeal, what is the correct mobile number, correct email ID? You should take date of receipt of the assessment order. There is normally now faceless assessment. If it is a physical assessment, also they will put in the portal. So the central assessments, all these things you should keep ready. The copy of the challan. So the challan, what you are paying for the appeal fees, how much fees in the next slide you will say. So how to fill up this challan? I am giving you the major head, minor head. And now earlier it was the self-assessment. Now for the past 1 year it changed. It comes in a 500 head. So if it is a corporation tax, different subhead, major head, the individual tax, some other thing. So like that, you should see the digital signature. If it is a digital, if you have filed the return with the digital signature appeal, also you should file with the digital signature. If it is otherwise say with OTP, so name of the authorized signatory and his PAN number also you should mention. If it is a company like managing director or managing partner, like that, designation of that authorized signatory. Whether an appeal in relation to any other assessment is pending, that also details you should keep. So the details needed for e-filing. So all these things, just like that, what all I have mentioned. So you should keep some homework and then fill it up properly. Then the appeal fees, as I told you, if the assessed income is 1 lakh and below 250, that was old thing, more than 1 lakh, but less than 2 lakhs 500 and then above 2 lakhs 1,000. So normally the appeals is 1,000 based on the assessment. Other than assessment for any other thing, the 250 rupees is the appeal fees. So pre-depart of tax, that's as I told you, on the demand raised in the assessment to grant the stay 20% is one side, but to admit the appeal on the original assessment itself, this for the original assessment, have you filed the return? If you had filed the return, the 140 capitalized self-assessment tax have paid fully. Is it 100% covered by advance tax, TDS like that? If not, at least in the before filing the appeal, the admitted income, admitted tax should have been paid. Then only the appeal will get admitted. Otherwise, the appeal admission itself. So you have to give a declaration in that form 35 itself. Check the facts and then give the declaration. And the amount also it will ask, date also it will ask. If no return of income has been filed, but you are admitting, you are not totally 100% disputing the addition. You are accepting there is some taxable income. Then to the extent of the taxable income, what would have been the advance tax liable, at least that you should discharge. Not necessarily the 234B interest slab, at least advance tax portion, you should discharge. Then only the appeal is allowable, admissible. So to whom the physical appeals apply? As I told you, the faceless appeals 90% we are having, but in the case of search and survey assessments done by the Central Circle, the International Tax Circle done assessments where huge amount of fraud or say escaped assessments is there, then automatically it is a physical assessment, but they also give electronic notices, electronic assessment orders, but it is a hearing is physical assessment in the central circuits. Then the appeal also, Central Circle Appeals Commissioner will give a physical hearing. For example, in Andhra Pradesh, Central Circle Appeals are in a Vizag. So the Central Circle Appeals, we have to deal with it. So after Central Circle Appeal, again you may go to tribunal. So this thing, in all other cases, the faceless appeals only. So for filing form 35, all these things are required. So these are the routine things, where whatever, simply seeing the form, filling it up, just for the namesake I have given. So keep ready the assessment proceedings, all these things, scanned copies, whatever you have. So that's including the assessment order and the remand notice, all these things are PDF you should have. And the browsers also, like Google Chrome or Internet Explorer, specified things only, not the some cave or some other thing. So you have the standard browsers, through that you try to file issues in e-filing. So any error in the filing also you can try to correct these errors. It will pop up some errors automatically, but sometimes if you give wrong number, for example, challan number, it tries to mismatch is there, base or code, serial number, if a mismatch is there, it will pop up. So try to do the correct things, don't do the mistakes. So then submit with all the attachments, try to save it. You check up all these things on the portal. As I told you, if you are filling up the statement of facts or grounds of appeal, special characters like brackets, inverted commas, all these things it will not take, special characters it will not take. So just like a simple English only. So you be careful of that while filling up. So within 30 days are you filing the appeal? So that is the date of intimation. So if there is a delay, try to give the reason and the affidavit and try to ask for the condonation of delay. The condonation petition should also be reasonably interpreted, not that it's the discretion of the CIT appeals, but it should be liberally, pragmatical and liberally. By delayed appeal filing, what advantage the assessee is going to get? That point the CIT appeal should see. Because it is delay, technical, though I am rejecting, you should not say. So the Supreme Court decision is there, which is a landmark decision. But number of decision I gave you, say for example, the delay condonation, February 29th of 2024 decision also I am giving, where around 250 days delay is condoned. What is the reasonable cause they have given? Saraswati Shishu Mandir. Sir, the appeal has to be filed by the principal, because she is the CEO, whereas the notice are received by the treasurer of the society. Treasurer of the society has given to the president of the society, whereas as per our this thing, authorized signatory is principal. Principal could not understand all these things. By the time she gave to the auditor, so some 260 days delay, condonable, Dehradun tribunal. So it is a condonable, it is a reasonable cause. What they say is genuine. How teaching people will know the importance of all these things. Reasonable, delay condone. So like number of hundreds of decisions are there, but I just give an example. So the stay petition, as I told you, if you don't file because you have filed the appeal, if you don't pay that minimum 20%, they may try to attach your bank accounts and then try to recover. But be careful that give a reasonable cause for not even paying the 20%. Then the commissioner will give, the assessing officer has no power above 50,000 rupees for a stay. If you pay 20%, whatever is the balance, the assessing officer can give the stay. But whereas for higher amounts, the commissioner, proper person, so he will grant the installments. So that's how the procedure for applying stay and then try to help when you are pursuing the appeal. It's better to take these things. So in one case, the rejection order of stay can be appealed again. So that's how the decisions are there. So now the procedure for appeal. After you filing the appeal, so under section 250, 6A, 6B, the procedures are there, subject clauses. So they will give a hearing notice. You can seek adjournment. They will give normally as an annexure, produce so many things. So you should give all these things. Better as a representative in the portal itself, you can as a wakalat or the power of attorney, you can file as a representative or the authorized representative. So as an authorized representative, you register in the portal and then sign and file, or else also physically you file the wakalat and then copy and then file these things. So if you are filing the additional evidence, the duty of the CIT appeals is it reasonable? Is it admissible additional evidence? Then he will seek the opinion of the assessing officer. Because before the assessing officer, what you could not file, now you are filing. Then the assessing officer, what is giving is known as remand report. That remand report, whether it is a favorable or unfavorable, again the CIT appeals has to give you, CIT or JCIT appeals has to give you a copy of the remand report, ask for your rejoinder, and based on the rejoinder only the final appeal order. So even after giving the rejoinder, he may ask you to give the final written submissions. First written submissions you would have given, but again you can give the additional written submissions. So detailed arguments are there only in these written submissions. Written submissions should be elaborate, descriptive, and not complex sentences. The simple sentences one should present his case. And after all filing, also final show cause notice, also final show cause notice like thing when the CIT appeals gives, it is the final notice, you please give your written submissions. Then you should ask for a video conference. So just like your physical document, if you are still wants to convince, your right to ask video conference is there. He is satisfied with all your arguments without giving you video conference, he can pass a favorable order. But if he is not satisfied with your arguments, he is bound to give you a video conference. It is your principles of natural justice. I am going to give you some of the case laws, and then finally you should give the order copy not only to the appellant, also to the assessing officer and the commissioner, jurisdictional commissioner. You should communicate. That communication is also very, very good. After the first appeal order, if you are satisfied, you can keep quiet. Otherwise, say you may go again in the second appeal. Or though you are satisfied in keeping quiet, department may go in second appeal. Now here it will go to tribunal. So whatever the relief CIT appeals has given, the department may go to the tribunal saying that, but for that there is a limit. So for first appeal, if it is 50 lakhs tax effect, less than 50 lakhs tax effect, they cannot go in that tribunal. And after tribunal also the assessee gets the relief. Unless 1 crore tax effect is there, it cannot go to High Court. And again, from High Court to Supreme Court also 2 crores limit is there. So based on that only department can go in appeal. Then additional grounds. See, additional evidence is different. Additional grounds are, as I told you, with the ground what you have not taken, you can take additional. For example, some exemption of section 10 or some deduction of section 80. You have forgotten to claim in the return of income, original return of income, you have forgotten to claim. You have come to know of it. Come to know. For example, a 100-bed hospital, 80 IAC, one deduction is available. You have not claimed it. But in the appeal stage, either you file in the original grounds or as an additional ground, you take, I am eligible for this. Please, now you consider this. So for this also number of decisions are there. These are all the additional grounds. Claim of exemption or reduction in the appeal is permissible. So these decisions are number of decisions. These beautiful decisions in the sense that what the assessee could not claim in the original assessment, he can claim in the first appeal stage. And for example, this peerless insurance I have quoted 416 ITR1 Supreme Court, or the National Thermal Power Corporation. See, this electricity generation, National Thermal Power Corporation. At the first appeal also they have forgotten. The peerless insurance case, at first appeal stage, they have claimed it is allowable. Finally, the matter went up to Supreme Court. As first appeal, they claimed it is coterminous with the original. Yes, it is allowable. Whereas in the case of National Thermal Power, they admitted the income, they paid the tax. For some other issue, they went into first appeal. That first appeal also, they could not get the relief. They went into the tribunal. At the tribunal stage, they realized that what they have admitted as income is not an income, it is a capital receipt. So they admitted in the P&L account, address certified, they paid the tax. At the tribunal stage, they identified, by mistake, we admitted as income, it is a capital receipt, not taxable. Valid, the Supreme Court said. They claimed, and then the matter went up to Supreme Court because of the department, and the Supreme Court finally said, yes, they are eligible. What they by mistake paid the income? Correct income only should be assessed. So this is the National Thermal Corporation 229 383. So these are all the very peculiar, which we, for our surprise, we all think that I myself admitted income, and where is the question of now claiming? So this is all. So like that, the question of jurisdiction. For example, if the jurisdiction is there, at any stage you can take jurisdiction, technical ground, that also. But normally, what I say, the 148 notice itself is invalid if you think. Right from the first day under protest only file the return, under protest only, go on saying that your notice itself is invalid. Anyhow, I am now to comply with your notice, I am filing the return, but I deny my tax liability. Your notice itself is technically valid. So that the section 292 or say the other saving clauses in the Income Tax Act will not come to the rescue of the department, but assessee. So additional grounds. So a fresh claim cannot be made in the assessment, but whereas it can be claimed in the appeal stage, that is the Gets India Limited. Similarly, the other decisions also I have given, latest editions I have given. So then additional evidence, as I told you, for example, a real estate person in a search case or even in a normal scrutiny case, what he has admitted as evidence is not supported by the registered sales. A real estate person dealing only with immovable property, he admitted some turnover. What is the turnover? Only the sale deeds is a normal turnover according to assessing officer. Whereas the assessee, sir, I am a seller of land. I receive some on money. That on money also, sometimes by cash, sometimes by check. That also is my turnover. He admitted. The assessing officer asked proof. The land purchaser denied to give that confirmation letter that he paid extra. Why? Because the stamp duty. Why you are not paid for stamp duty avoiding? You are paid the extra money. Or I'll say it is a search case. Normally, real estate search case means on money. Number of decisions says on money is also turnover. On money also. If the books of accounts are rejected, then estimation of income on the on money also. The assessing officer normally on money means 100% income, you will say. Whereas you will say on money also is my turnover, sir. Number of days. When I receive on money, at the time of sale, at the time of purchase also I would have paid on money. So there is a reasonable human probability. So number of high courts decisions say only one on money. You, for example, here itself I should tell you, nowadays after GST, many suppliers, if they fail to pay the GST in the third year, fourth year, all the last 3 years returns will be taken up for scrutiny, because in the fourth year the GST department informed the income tax department that so-and-so dealer, so-and-so GST person, registered person is absconding, is not filing his returns or not paying the proper. That means you would have been an accommodation entry man, you would have been a bogus purchase by the particular assessee. My assessee is a seller denying the liability. So the bogus purchase word is not there in the Income Tax Act. So the bogus purchase in the decisions of income tax only it is there. So the assessing officer says it is a bogus purchase. Bogus purchase can be 4 types. Non-existing person, no supply at all. Real supply is there, but not the real person invoice, some other invoice. Real person could not give the invoice. A domestic manufacturer without GST registration. Another GST person gave an invoice. That is so like that. Bogus purchase can be 4 types. Name. So which bogus purchase 100% addition? Which bogus purchase percentage of addition? So at the appeal stage, what sort of evidence we are giving to interpret the same? So like that, the bogus sales, for example, because in many businesses, if the purchase are all cash purchases, sales will be 100%. For example, I can say agriculture products, all cash purchases, but he sold to only registered persons. For example, this is famous for a tamarind. The tamarind seeds is a waste product for the agriculture. He sells only the tamarind pulp. The seeds, 1% purchases, 100%. The seeds, after peeling in a particular machine, decadicating machine, the black, say brown portion will be peeled after soaking in the water, and then they will be sold only to the cloth manufacturers, the paints manufacturers. These tamarind seeds so valuable. So all these sales are only to business B2B, and then 100% money is received through bank. 100% is purchased are through cash, crores of turnover. The officer will say, no, the purchase are not reliable because they are not assessees, there are agriculturists and not assessees, and you paid through cash. Your purchase, I don't believe. Your sales, correct. So I deny some purchases. Thereby income will increase. In some cases, say for example, fruits wholesale merchants, in every town, you will have apples dealing, grapes dealing. He will 100% purchase maybe from outside state. So through lorry transport, payment is through bank, but all his sales are for cash. The officer will say, your sales suppressed because your 100% sales are for cash. I don't believe your sales. You are not correctly reported. So like that, there may be this side or that side, a possibility of the officer's view will be different from the income tax angle. As a department officer, he tries to say the assessee, you produce some evidence. You confirm that your sales are correct. You produce some evidence that you are purchase. At the time of assessment, you could not produce. He may ask produce out of 100 purchases, produce 20. You could produce only 2. Then as additional evidence at the time of appeal, at the time of appeal hearing, you may procure some additional evidence and then produce what the documentary evidence lapse the assessing officer has pointed out during the assessment. You may procure such evidences and file as additional evidence, which is admissible evidence. And maybe the appeals commissioner will refer the same to the assessing officer for his comments. That is the remand report, what I have seen. So the assessing officer would not have given you sufficient opportunity to prove it, or had he given the opportunity also, you have no sufficient time to collect that, gather that evidence, so you can do all these things. So now additional evidence. For example, the CIT is satisfied what you filed is not an additional evidence. What you filed is only a supplementary evidence, or it is only complementary evidence, not a direct additional evidence. For example, a real estate businessman, as I told you, he filed his return, admitted the turnover, registered documents of sales. So the registered documents first page only is given in the assessment sheet. Assessing officer will say, no, you have not given the full document copy. Now in the appeal stage you have given. Is it an additional evidence once again for the verification of the assessing officer? If it is a supplementary and complementary evidence, no necessity of again referring to assessing officer. Because the commissioner gave the relief, the department will go to the tribunal and will say, the commissioner having received the additional evidence without giving opportunity to the assessing officer has given relief to the assessee. So the appeal commissioner's order is invalid. So the department may say, but you have to say that it's not merely based on this supplementary evidence the commissioner has given, based on the original evidence itself is given. That's how the argument should be there. These are all the supplementary evidence. I give you these things. So it's not necessary. And the commissioner himself may call for some evidence. That is the power of the commissioner, which we are going to see in the next slide. So these are all the reliefs. In the tribunal, we should is convinced that it is not the corroborative evidence for the original evidence, original argument already given in the assessment. But for extra reinforcement sake, I have given the evidence. It is not coming within the definition of that additional evidence. You may argue. So the remand report, as I told you, the assessing officer, you filed, say, for example, section 68 unsecured loans, what the evidence you are given during the assessment stage is not satisfied. Then once again you filed to substantiate the capacity of those unsecured loans, you filed some evidence in the appeal stage. Then appeals commissioner will send the same to the assessing officer. Assessing officer will give you an opportunity. Again, you produce them. I will cross-examine them. I will examine them, and you can see whether the reinforcement is correct or not. So then the assessing officer giving an opportunity to the assessee, he will prepare the remand report. Then his remand report he cannot show, he need not show to the assessee. Remand report will go to the CIT only, appeals. Then CIT appeals will give a copy of the remand report and ask for the rejoinder of the assessee. Without asking the rejoinder, if the CIT appeals passes a negative order, then also it is against the principles of natural justice. Number of decisions are there. So in the appeal, the CIT appeals may confirm the assessing officer's penalty or original addition, or reduce the income, or reduce the penalty, or enhance it, or annul this assessment. CIT may consider and decide any matter notwithstanding that such matter was not raised before the CIT. CIT officer also can, from different angles, while confirming, if you want to enhance, but you should give a opportunity to the assessee. I want to enhance. You have come for a relief of the assessed income. Instead of giving relief, I want to enhance. I'm giving you an opportunity. You give your objections. That's how it should be done. So for enhancing, say you should give the opportunity. Then, for example, in the assessment stage itself is evidence given is not properly considered. Paying 20% is difficult. Installments also is difficult. If the assessment is without applying the principles of natural justice, whatever the evidence you are given is not considered in the assessment stage. Instead of appeal, I told you, writ remedy is also there. So the enhancements of how it should be done is there. Now I'm left with 2-3 slides only. So within another 5 minutes I will close. As a time schedule, as per the time schedule, I am rushing to complete this thing. So the assessment, if you wants to enhance, so is it the subject matter of assessment or not? A new source of income the CIT cannot invent and then try to rope in. So appeal to be decided within a reasonable time is there as SOP, but nowadays not even 1 year, 2 years, 3 years also they are not deciding. Even after hearing within 15 days the order has to pass, nothing is happening. But anyhow, they are there as SOPs only. So the appeal has to be communicated. The appeal has to be communicated to the assessee, the appeal order. It is the responsibility cast on the CIT appeals to communicate the order. So after receiving this order, it is up to you either to accept or to go to the tribunal. So that's how I have completed my presentation, and I try to give some practical examples. What is the actual use of going in appeal and how to present the case? How to present the case in a number of cases. My experience is, the more you go through, first of all, 3 things I would like to say. What is appeal? Seeking some dharma, relief, real income being assessed. Our Puranas, I quote 2 things from our Puranas. If you read Ramayana, normally village people know Ramanjaneya Yuddham. Anjaneya fights with Rama for some justifies. Rama, you are saying dharma. A particular person has come to me to preserve the dharma. Even if other side you are there, I will fight. Similarly, Gayopakyanam, Krishna Arjuna Yuddham, you will see. Even cinema, I think, has come, Krishna Arjuna. So the Arjuna tried to save somebody Who is for a just cause, sir? Why that fellow has come to Arjuna? He cannot fight directly with Krishna, and I am an innocent. By innocence, I have done some inadvertent mistake. Please save me. Then Arjuna comes for it. So like that, the chartered accountant, for a just cause, even with God, you should be ready to fight. Our Puranas say, for it is a just cause, fight. Definitely, anyone, one day or other, you will get the relief. For a just cause, you should be ready to fight. That's what I try to say. The appeal is such a satisfaction. The number of cases. Second example, I want second say my reliability is, you are not the first person on this first issue. Similar things, similar facts, somewhere else somebody would have done it. I told you, no, that check discounting facility. I got 3 years back the case. I quoted the decisions of 2022 and 2023 decision. Whereas I got the case, for example, the Bombay High Court, I gave the Dalag securities, 0.15% is sufficient. Bombay High Court said. I got the same case from Adoni. So, I3 Benefit Corporation. So, what they do, for example, the example of what I want to say, my particular case which I have handled, then I searched. Is this the first time this sort of business? For me, it is the first time. But such businesses in India, so many people would have dealt. So many case laws will be there. Whatever the assessment order you are receiving, 99% for me, with my experience, similar situation, similar assessment order, already disputed, some relief in the CIT, some relief in the ITAT, reported decisions, unreported decisions, some relief in the high courts, would have been there. If you believe and search, definitely, maybe you are search for 1 day, 2 days, 3 days, 10 days, you will get some answer, some relief. That's how search the case for every situation. Because such transaction, somebody would have done. Somebody already would have got some relief. That will give you that will reinforce your confidence in filing the appeal, arguing the appeal. That's how we should deal with the cases. As I told you, unwritten principles are there in the income tax. For example, one fellow, sir, throughout the year, every day he deposited 1 lakh, every day he withdrawn 1 lakh. Deposited 1 lakh, withdrawn 1 lakh, deposited 1 lakh. The officer, what will say? 300 times you deposited, 300 lakhs, 3 crores, he will make the addition. Court said, peak cash credit. How much is the peak cash credit? One theory, not there in the Income Tax Act, but the courts decided. Are so many times he deposited, withdrawn. He is not able to give any evidence. Peak credit only will sustain. Peak credit theory. Telescoping. Are 6 years when search is conducted, every year some unaccounted transactions, unaccounted income. But the Income Tax Act, what it's having? 69C, unaccounted expenditure. For unaccounted income, when you assess, unaccounted expenditure shall also be given set off. Telescoping. 3-4 types of telescope. Early year income assessed, second year expenditure or investment. Telescope that early year's income to the second year investment. The telescoping theory only in the judicial decisions, not in the Income Tax Act. So, number of situations, number of arguments you can put up in the CIT appeal stage. So, by developing all these things only, as I told you, the bogus purchase nowadays, the GST, invoices trading, or say the penny stocks, number of decisions. So, when bogus sales are there, bogus purchase are there, only the GP, number of decisions. So, you should be able to put for your argument. For example, the Income Tax Act, not even a section, principle of mutuality. For example, resident apartment residents association, golf club, or say some other football club, some other social club. For all of them, members benefit check. For example, trade associations, the income tax CBTD circular, one circular is there. I think it is circular number 8 of 2011. Circular number 11 of 2008. Circular number 11, CBTD circular number 11 of 2008. Please see, principle of mutuality, we appreciate and accept. Only CBTD circular, no Income Tax Act or rules say. So, principle of mutuality, what is say? One cannot earn his own income. For example, cooperative societies, see, for example, consumers cooperative societies, farmers cooperative societies. Principle of mutuality will apply. ATP from 17-18 assessment year, unless you file the return within the due date of 139(1), ATP benefit It cannot give. Number of notices are coming nowadays for 3 years, 4 years reopening. All the cooperative societies now assess. You are not filed the return, no ATP benefit. Come on, as per your audited P&L account itself, you are having income, pay the tax. Then apply the principle of mutuality, which is not there in the section. Number of decisions on principle of mutuality. They say if the members contributed income and members only are the beneficiaries, that is not at all an income definition 224. Remove that. Only third party income is taxable. It's not there in the Income Tax Act. Number of decisions are there. If ATP is not there, go to the principle of mutuality. So there is an alternative remedy. Try to ascertain. That's how I think I exhausted my time. So I thank you. And any questions, sir? Please.
Yes,
Shall I
sir.
close
Yes,
my
sir.
PPT? Shall I close my
Yes,
PPT?
sir. Yes, sir. Please close your PPT. Right. Great, sir. Sir, that was a very exhaustive explanation, and you have covered almost all the intricacies which are involved in the filing of appeals. Sir, if you permit me, I will take up the questions in the chat box one by one.
Yes.
Sir, of course, I am following the LIFO method here. Can you please elaborate on pre-deposit of tax and how to ask for a stay of demand?
So in the GST Act, 10% pre-deposit is the correct word used in the Act. Whereas here in the Income Tax Act, pre-deposit word is not used. What they said, if you have filed the return and you are coming to the appeal, for admission of appeal in Form 35 itself, on the admitted return, have you paid the tax? Yes or no? If it is yes, when you have paid, at least if not in the assessment stage, before filing the appeal, that 30 days, you please pay the tax. That is what I said pre-deposit. So if you are not filed the return, whatever the income disputed you are saying, you are all the 100% addition you are not disputing. You are disputing only some percentage, 92%. Sorry, I added 100%. My income to be 8% only, I agree. Then to the extent of that accepted income, pay the tax now as if it is an advance. That is the pre-deposit is the word I have used. Yes, sir. That is the method.
Right, sir.
Hmm.
Now, CA Avinash is asking, please explain non-maintenance of books of account, though turnover above tax audit limits and tax audit done, how to handle. So, Avinash, can you please explain? Books are not maintained, turnover is above tax audit limit, and the tax audit done. I think it is conflicting here.
No, conflict. It is the reality. What he said is reality.
Oh.
Our colleagues, majority colleagues, without maintenance of books of account, tax audit is done, tax audit report is filed. When it is taken up for scrutiny, both hands raised. That is the question.
How to
Tax
handle,
audit is done, books of accounts are not maintained. That is
how
the
to
question.
handle, okay, right.
How to handle means you have already raised two hands. Where is the question of handling? But anyhow, that is the best method, I say. At the time of scrutiny assessment itself, you say, I am not having books of accounts. I am representing the case. I cannot produce the books of. Please estimate my income. Why? Because even if you then start writing the books of accounts, as per the balance sheet and P&L account already filed, number of violations will be there. 40 capital A3, 40 AIA, 269 SS, all the violations will be there. You cannot write the books of accounts now to suit the already written and filed the balance sheet. You simply say, no books of accounts, sir. Somehow assessee lost the books of accounts. We pray to estimate the income. See, there are two possibilities. If you file the books of accounts also with the evidences, proper examination of the assessing officer, you are not able to give the evidences, he can reject the books of accounts and estimate the income. Rather than he rejecting the books of accounts and you say that I have audited, I have already audited, I have filed. Auditing is a myth in my view. In the income tax cases where the assessee is weak, if assessee is strong, you rely on the audited books of accounts. Only with audited books of accounts you fight. It is a proper way, correct way. When the assessee is weak, in the appeals, most of the cases, assessee will be weak. So in the assessee is weak. For example, creditors confirmation. Without creditors confirmation, creditors list is arrived and filed. In the return also it has sundry creditors outstanding. You would have filled up that amount also. But no confirmation letters are obtained. Now if you start obtaining, creditors amount will reduce. To the extent creditors amount reduced, unexplained income. 69, 115 BBE, heavy 75% tax. So you say books of accounts are not there. Percentage of income I am ready to accept. So that is the best method. So if your books are not reliable, Don't worry about the tax audit. Already filed also, ignore your audit report. Doesn't matter. That's my answer.
And if in the same case, ITR is not filed, tax audit report not filed, then penalty will be levied for non-maintenance of books of account.
Sir, you are saying two things simultaneously. I have not filed the audit report. The SSC has not filed the return of income. Now 148 is there. In response 148, already I have told in my deliberation, you estimate your real business income. In 148, without audit report also 5 crore. What is your turnover? It asks the return. Say 5 crore. What is your income, business income? Estimated income 5%, 2%. So on 5 crores, 2% comes to 10 lakhs. 10 lakhs is my business income. File the return. Then penalty, only 25,000 rupees for non-maintenance of books of accounts. No audit report, 271 capital B, 271B, penalty will not come. They will not ask you why you are not audited, why you are not maintained. Sir, some difficulty, I could not maintain the books of account. Penalty I am paying. That's all. That's how you should come out. That's the best method in my view for majority of the businesses people who could not do proper business, do all sorts of things. Then better without audit report, estimated is the best way, so that you can avoid even under-reporting also will not come for estimated income. Not the question of misreporting, come under-reporting. Even under-reporting will not come for estimated income because you estimated 1%, officer estimated 3%, even for that addition. No question of under-report. You will come out with penalty and simple tax. That's better. Sir, next question.
Right. CA Swami is asking that SSC is having agriculture land. He also filed the Patadar passbook and also agriculture income certificate from Tahsildar. But AO is not satisfied with that. And he is asking for bills of sales voucher and also for expenditure.
Sir, your officer only, you are asking for the bill, sir. There are some intelligent officers, they search the satellite map for that particular assessment year, 16, 17. If you apply to the Hyderabad, one center is there, they will give you for a nominal amount. In 16, 17, that particular survey number was there a crop. The satellite has taken. So the assessing officer simply will write and he will get a certificate. If you ask also, they will give the certificate. So the satellite view for any year, any month, in once in 2 months, I think the satellite will take the pictures. So for any survey number, if you ask, even now for 5 years back, 10 years back, the assessing officer. So based on that, even if you had admitted agriculture income, sir, there is no crop. I got the evidence, satellite picture. Please, this is not the agriculture income. I am taking it as unexplained income that will come. So whenever you file agriculture income, it is the duty of the SSC, a reasonable, what is probable, you should file. You file the Tahsildar certificate, mere Tahsildar certificate may not be sufficient. But in addition to it, some other certificate, some other evidence you try to give. Whatever is what a normal man will pursue. Because you are an income tax SSC, you are saying agriculture income, only on somebody's certificate you don't rely. Some evidence you try to get. Some agriculture expenses incurred and agriculture gross receipts received. This is how my net income. Some documentary evidence is necessary. That's my session. Next.
Sir, a physical application for a stay of demand was submitted to the assessing officer and he has acknowledged that also. But still no reply has been given. So how long will it take?
You are fortunate. If he is not disposing of our stay application, you are fortunate. He cannot attach your bank account. If he disposes, immediately he will attach your bank account. If he is not disposing your stay application, you are fortunate enough. Why you worry? After he denying only, your worry starts. So long he keeps pending, you are safe. You filed within 30 days. When did you file the stay application? Within 30 days. As you file the appeal, simultaneously you file the stay application. He keeps silent for 4 months, 5 months. Don't worry. You need not worry. That's my answer.
Yes, sir. Surya is asking that PCIT has not reduced 20% of the demand to get stay. Even the computation of total income shows refund of tax. What is the remedy? So if PCIT does not accept for 20% demand, so what is the SSC's remedy?
Sir, any order below this commissioner's order, you can file the stay rejection also is an appealable order. Any order is an appealable order. So the rejection is an order. The rejection order, you can go to appeal. So that is one thing. Number two, sir, your computation you said just now, refund. If your computation is refund, where is the question of demand 20%? Your computation says 20 refund is there. That means even if I'm making the addition, even in the assessment some addition is made, you already paid excess, that's why you are getting the refund. Is it not? The question says my computation refund is there, whereas the CIT refuses for 20% stay. That is the question now.
So
Just now,
actually, the 20% he is referring to the assessed tax.
sir, in the assessed tax, in the computation, is there a demand or is there a refund?
As per the question, it says that computation he has a refund.
When the question is a refund, where is the demand notice? 156 assessment order enhanced addition made assessment order you received, but in 156 notice demand is 0 because it is a refund. Computation it gives a refund. When the demand is 0, where is the question of 20% say? You have already paid 100%. That's why you're getting the refund. Where is the question of 20% say? Your application, your applying is wrong, and CIT rejecting is also wrong.
Sir, with due respect, what I understand is the original return what they have filed might be having a refund.
Now, might be having a refund, but in the assessment, it results into a demand. For that demand, you can go for 20. But there are number of case laws. Your inability, 4 ways you should prove. Number 1, the addition is not sustainable. Wrong addition. Number 2, your day-to-day business will already running with bank loan or some other loan. No working capital. Genuine difficulty. The third, your appeal filing. So like that, if you have these genuine reasons, then the CIT is bound to consider your non-payment of 20%, and you should grant the installments. Number of decisions are there.
Okay, so if that order is rejected, if that application is rejected, what is the recourse they have to follow, sir?
Now, you must go to the appeal only. If it is a commissioner who has rejected, then we can go to the tribunal and say commissioner rejected his order. So then any commissioner's order which is not judicious based on the case laws, is not judicious, he has not applied his mind. If it's a commissioner say, then commissioner's order, you can go to tribunal only. Commissioner's order, if it is a lower authority stay rejection order, you can go in appeal. I gave 2-3 editions also, stay rejection, appealable orders.
Okay, and the next one is assessing officer has added unrecorded turnover of rupees 50 lakhs under section 69C of the IT Act. SC gone to appeal, and CIT appeals has enhanced the unrecorded turnover to 100 lakhs without giving notice and reasonable opportunity to the SSA.
Sir, you said 69C. What is 69C? Unexplained expenditure. What is unexplained expenditure as per 69C? When an assessee maintains books of accounts, outside the books of accounts, some expenditure is incurred. I am an assessee. I performed my daughter's marriage. My daughter's marriage, I incurred the expenditure. That expenditure I have not recorded. They have come and seen that daughter's marriage video and then said, sir, this expenditure is 30 lakhs. You are not shown. You have shown only 3 lakhs your daughter marriage. Then that 30 lakhs expenditure minus 3 lakhs I have admitted. 29.7 lakhs is the 69C, unexplained expenditure. You mentioned in this case 69C. 69C unexplained. That 69C unexplained expenditure, the assessing officer with some evidence has made the addition. That evidence, if you had rebutted, you have gone for appeal. The appeals commissioner enhanced that 69C, you are saying 100 lakhs. So that 69C, assessing officer, how the CIT appeals, how we got more evidence of your unexplained expenditure. So that also you should again go to tribunal. CIT appeal says, enhanced it means it is power is there for enhancement. Before enhancement, you should give a opportunity for you to defend. If I had given the opportunity and you are saying now he has not given reasonable opportunity, your question. So if he has not given the reasonable opportunity, principles of natural justice. So on that ground also you go to tribunal, you will get the relief. That's only the remedy.
Now, CA
but so one word, tomorrow sir is going to deal. Tribunal, on that confirmed demand, tribunal cannot grant stay. 20% you should pay. Tribunal cannot grant installments. Tribunal can grant stay if you pay 20% only. Another condition in the tribunal is, if once you pay 20% and ask for the stay, within 365 days, the appeal has to be disposed of. Tribunal. So there are tribunal rules. Tomorrow, Sir Jeevan Hari sir will deal with that.
Yes. So CA Tarun wants to know whether the SSC can plead to reopen the assessment in appeal. What happened is, can the SSC plead to reopen the assessment in appeal? As the SSC has filed a return under 44 AD, whereas he is supposed to file a tax audit report. Means Form 3 has to be, instead of Form 3, 4 has been.
Sir, your question is, in the appeal stage, can the assessee ask the CIT appeals to reopen the assessment? You are saying, question.
Might be that one.
It is not reopening, redo the total assessment like thing that he can ask. So he can plead before CIT appeal, sir, my return itself is wrong, but this is the correct way of computation. You redo the computation. That's how the CIT appeals, the assessee can take a ground and plead that afresh. This is the correct turnover, this is the correct expenditure. You plead, no problem, no problem. You can. Next, sir.
Right. SSC filed return of income in response to notice under 148 by admitting income under 44 AD. The same income accepted by AO and passed the order without addition of income. Whether penalty under 271 1C can be levied.
No, no.
Declared by the SSC.
No, 1C penalty cannot be, need not be. Number of decisions are there. Number of decisions. You search. Sir, nowadays without any income tax software, Google search itself is giving you the case laws. But there are case laws, many case laws in favor of the SSC like this. Return income accepted, no question of 271C.
Found wrong additional income and tax calculation in computation sheet. What is the procedure?
154. In the assessment order, say for example, assessment order completed the assessment 28 lakhs. Whereas the computation sheet, 1 crore 28 lakhs is the computation. Then 154.
But
jurisdictional officer.
But what happened in this case is, though 154 is filed with AO, AO rejected, saying that he has no right to rectify the order.
He has got the right.
Yes,
CBTD circular is there, SOP is there. He has got the duty to rectify 154. In the faceless assessments also, jurisdictional assessing officer has got the right. If he denies it on 154, you can file the appeal. On the assessment, you have not filed the appeal. But on this rejection of 154, you can file the appeal. That is the answer.
Yes. Yesterday, I think this question was dealt with, but anyhow, purchase of property by NRI in India for 63 lakhs. AO gave 148. SC did not file ITR. Now, in this case, is it better to go for appeal or writ petition?
Appeal only is better.
Appeal only.
Because 148 is an opportunity given. Why you have not filed the return? Your income may be 0. Your income may be 5 rupees, 10 rupees. When 148 is given, you have not responded, means in the writ it is not a. In the writ, where the writ will be successful, the assessor should have done his duty in all respects. Even then the executive officer, the assessing officer has done wrong. Then writ will 100% sustain. Whereas you are saying after 148 notice, the NRI has not filed the return. Then better you go in the appeal only. No writ.
Yes. Now, a return is filed under section 44 AD. Now, is it necessary to produce the books of accounts at the time of scrutiny?
No, no. But please be reminded. Plus be reminded. 44 AD on the turnover, the 8% or 6% if you admit, the business income they cannot. But your balance sheet, your assets are more than the admitted income. Your opening capital 1 crore, 44 AD income is 10 lakhs. Your closing capital according to you, assets minus liabilities 1 crore 50 lakhs. What happened to that 40 lakhs? So the 44 AD protects you from not asking for the books of accounts of business, not asking for the expenditure proof. 8% you filed means 92% is genuine expenditure. No violation, genuine admissible expenditure. But for the balances in the balance sheet, I give a practical example. Contractors. work in progress. They admit on their gross turnover 8%, whereas they admit their closing work in progress more than that income without any creditors, without any loan. Then that unexplained investment work in progress higher side also is unexplained. More than that 44 AD income, where from you got that work in progress? By mismatch. So for balance sheet items, it is not a protection 44 AD or 44 ADE. So only for business income without books of accounts, to the extent you can find. That is the answer.
Yes, and the supplementary question to that, whether we should submit profit and loss account and balance sheet. Actually, you have to give certain information with regard to cash, debtors, creditors. Minimum mandatory information is to be given, though books of accounts are not maintained.
Sir, once the case is 44 AD case is taken up for scrutiny, the assessing officer can ask you, what are your opening assets, what are your closing assets? What are your opening liabilities, what are your closing liabilities? Automatically opening capital, closing capital they will say, and how that capital increased with this 44 AD. Can you explain me? Assessing officer can ask. It is his power, he can ask.
Stock also. Stock.
Total assets, asset means stock, all these things.
Yes.
That's how the 44 AD protection is limited protection. In fact, my view, in all 44 AD cases, you prepare the real balance sheet. To the extent shortage is there, increase the 44 AD income 8% to 10%, 20%, 15%. You can, then automatically you are safe. See, the shortfall, you admit as business income, 44 AD, what it says, minimum of 8% actual income. You got that year actual income, 15%. You admit 15%, be safe with normal. If you don't admit the difference 7%, if the officer detects, it is not business income. It comes in 115 BBE, gone for 75% tax. So in all such cases, better though you opt for 44 AD, opt for higher percentage of income, you are on the safe side.
And also balance sheet profit and loss account, the bank people will ask for loan purpose. So definitely, as you said, it is better you prepare a profit and loss account balance sheet, because on a later date, you might be required to prepare it for the last 2 years also because of loan purpose. Sir, filed ITR using new regime, but filed 10 IE after due date, got notice for additional tax. Nothing can be done. How to deal with it?
Sir, 10 IE is arrears distribution. I think the form is 10 IE is for arrears distribution. So within the new regime, within the due date, you should file, and you should opt for the new date for earlier year. Now from 24-25, automatically new regime. If you want old regime, you should file the form. So after the due date means no question, automatically extra tax. Yes.
Because new regime is applicable only if filed within the due date. Yeah, those notices are coming, sir, because some people are filing a belated return, but claiming the are coming into the new regime. They are filing the return because non-business cases, you need not file the form also. So without filing the form, belated return, if they claim a new regime, they are getting the 143(1) with demand. That is happening, sir. SSC received 148 notice to file return, but SSC needs to pay tax and need time of 15 days in addition to the 30 days given in the notice. When to able to submit adjournment? Now, is there any procedure, sir, like this?
Sir, after receiving the 148 notice, even if you are not paying fully the tax, return filing it will automatically take. Not like normal course, without paying the tax now, it is not accepting now. So not like that. You admit the income and file the return. Pay the tax later on. Maybe for not paying that self-assessment tax 140 capital A, penalty also can be levied by the assessing officer. For not paying the self-assessment tax, not only interest, penalty also can be levied. There is a particular section penalty for not paying self-assessment. But filing the return within the 148 given period is the mantra. You have to file the return. Don't seek adjournment. He has no power to give extra time also. 148 is a statutory notice, statutory time. Where is the question of he allowing you, you pay after file the return after 3 months? He cannot. So you have to file the return, statutory notice, statutorily comply. Don't worry. Payment of tax is subsequent.
Sir, the limitation of the proceedings will be recorded at the time of giving notice itself. When you submit a response, if you want to click the submit response button after the 30 days time, the submit response button will get grayed out. And you will not be able to file the 148 return also, sir.
Sir, even if it is not fading, even if you file after 30 days, as if it is filed in response 148, it will not be considered. Law says after the due date, if you file, as if filed in response notice, it will not be considered. As if you have not filed the return, they will complete the assessment under 144. Without return, under 144, they will complete. So better you file. That is my advice.
Yes. So almost I have went through the messages in the chat box, sir. So we have filed CIT appeal in October. However, missed to file a stay application. What is the solution?
Now you file. Now you file. Normally within 30 days you should file. You have forgotten. Now you realize. Now 5th month, 6th month. Okay, you now file the stay application. Nothing wrong. Nothing wrong.
Yes. So I'm afraid I'm exhausted all these the queries, most of them. So shall we conclude? Shall we conclude, sir?
It is up to you. It is welcome for me. It is up to you.
Yeah, a stay application to be filed to AO online or offline?
Physical file only, sir. Online is not there. Physical form. Stay
Physical-
application to jurisdictional AO. First you should go to jurisdictional AO.
Yes.
After that only.
Yeah. So somebody have raised their hands. They want to speak, I suppose. I will do one thing. I will enable unmute themselves. Yes, sir. I have changed the settings. So anyone who wish to directly pose a query to the speaker, sir, you may please unmute yourself and you can speak.
Sir, good evening, sir. My name is Srinivas. So I have one query. Sir, in one of the case, we have received the intimation wherein CPC made certain adjustments. Those are rectifiable items, so we had filed rectification.
Not audible, coach. Loud, please. A little bit loud.
You please be clear, sir. You please be clear.
Okay, sir, am I audible now?
Yeah, please go on.
Sir, in one of the case, we had received intimation wherein CPC made certain adjustments. Those are rectifiable items, so we had filed rectification application. Subsequently, return got selected for scrutiny assessment. Assessment got completed under 143.3. AO has made certain additions, but in the computation, AO has considered income as per 143.1 intimation, sir. So we have filed appeal against 143.3 order. Now, should we also file appeal against 143.1 intimation?
Sir, you are having after 143.3 order, you are not satisfied with the additions, you file the regular appeal.
Yes, sir.
But in the computation of tax, some mistake is there. That also you take as one of the grounds in the CIT appeals, grounds of appeal, simultaneously, which is not prohibited in the Income Tax Act. Simultaneously, file 154 petition with the officer. Sir, you gave the 143 order, but whereas in the computation, it is based on that 143.1. So it is only a system mistake. 154 you file, so the demand will come down. So the demand coming down, if it is a technical mistake, because the assessment order is an appeal, but as per the assessment order, computation is not done. You are saying the assessment is completed on 143.3. The demand is as per 143.1, old first one. So the 154 you file, he is bound to pass an order on the 154.
No.
But anyhow, you take it as a ground also in the appeals. So in the appeals, by chance, 154 within 4 years you can file.
No,
SOP,
sir.
SOP, jurisdictional officer within 6 months must dispose of the 154. Within 6 months, if the jurisdictional officer is not disposing of 154, to the commissioner or principal chief commissioner, you can file saying that your grievance, my 154, 6 months over, still not disposed of, demand is high. Like that, you can file a grievance also. But anyhow, for a demands, you can file grievances. But anyhow, if 154 you are not preferring, in the appeal itself, you take it as a ground. That is also better. That's my advice.
In the same appeal. Because for the same assessment year, 2 appeals can't be filed, I think.
Yes.
1 appeal only can be filed.
Yes. Not only on the additions, on the computation. Computation sheet is part of assessment order. Number of decisions. Computation sheet is part of assessment order.
Seshgir Rao garu, మీరు you have raised your hand. Do you want to speak, sir? Seshkirrao garu. Okay. And sir, in section, if section 12A provisional registration cancelled, whether total receipts are taxable or only surplus is taxable for returns already filed.
For both these things, different situations, two different answers I have to give you. I will give you examples. You are saying 12A, that means it is a religious or charitable institution. So if it is a charitable institution, your provisional 12A is not getting converted into regular registration. Now the registration is refused. Then your provisional is also deemed to have been cancelled. Then on what income they will levy the tax is your question. If it is a charitable institution, A. If it is a educational, for example, students' fees received, expenditure, net income only is taxable. If it is a purely on government grants, public donations, you are running that institution, gross income is taxable. Your expenditure against the grants, your expenditure against the donations is not deductible. Gross amounts are taxed. So two different situations, two different ways of. Once there is no 12A. Yes, sir. Next question, sir. Can be the last question.
Yes, definitely. I will take up the last one. Section 89(1) relief for arrears of salary claimed in return of income, but missed the filing of 10E.
At the time of assessment, you can file, or at the time of appeal, you can file. No problem. No problem. Some procedures are not time bound. You can do it at the second stage also. No problem. Number of decisions are there.
Actually, what they have done is after receiving the 143(1), they have filed a 10E and filed a rectification petition. 150. So, thank you.
Hello.
Tarun Kumar, please, sir. Go
Yeah.
on.
Sir, actually, we have filed an appeal against the AO order, and we have that's a high pitch assessment. Actually, see what happened means we have filed a stay application to assessing officer. He has rejected as we have not deposited the 20% of the demand. Okay, so now can we file stay application to PCIT for 100% stay?
Yes, 100% stay you file, but
Okay.
normally they will not give 100%. I told you the 4 conditions. Your inability, cash balance is not there, liquidity is not there. Your high-pitched assessment is genuine. These are the grounds and these high-pitched assessment.
Okay.
And you ask for the installments. Small, 100% stay you grant, you ask. But if it is a small, affordable, your income is regular income, how much? Out of the regular income, 75%, 50% my expenditure, 50% I can pay. You prove that this is my regular income. I can save only 30%. National savings is only 30% of the income. So 30% every month you ask me to pay, I am ready. Like that genuine reason you feel, definitely CIT will grant the installment. CITs are bound to grant installments, liberal installments. That is the SOP. They are granting. Hundreds of cases we have seen.
Okay. Thank you, sir.
Right. So thank you very much, sir. Phalguna Kumar garu. Actually, in spite of your busy schedules, and also I understand nowadays many people are requesting you to come and speak. So, but because of your commitments and you have to deal with a lot number of appeals day in day out. So I heard that you are limiting. Of course, you have served the fraternity for the last several years, still continuing, but you will also have certain office commitments. So, but in spite of all that, you have obliged our request to be a part of this series of web lectures. And I should also tell the participants that actually in designing this web series and in also suggesting the speakers and the topics, Phalgun sir has helped our branch in designing and organizing this program. I thank you very much, sir. But I thought this month you will be coming to our Vijayawada branch. But however, because of your commitments, you could not do so. But definitely in the near future, please give us an opportunity so that you will come to Vijayawada and address our members. Thank you very much. Thank you once again. So friends, tomorrow will be a session on appeals to tribunal dealt by CA Hari from Vizag. I request all of you to join for this session, and also Phalgun sir, also I request you to make it convenient to log in for at least for some time. Right.
Definitely, I will try.
Thank
Please.
you. Good night.
Thank you,
Good
sir.
night, everyone. See
Good
you tomorrow.
Good night. Good night.